Welcome to another Money Space with me, Kalu Aja. We're on here every week. And of course, as usual, we're talking money, the economy, and of course, finance, personal finance. We want to make money personal to you. We want to make you a better investor, as it were. And we want you to essentially learn all the stuff that's happened throughout the week or throughout the year or whatever is interesting to you. So that way, you'll be a better steward of your money. We're in 2025, guys, so you made it. You made a new year. And we want to basically review the stock market in 2025 and sort of just get the outlook for 2025, not just for stocks, maybe for bonds, Nigerian unit trust schemes, mutual funds, the Euro bonds and all that. So we invited Mr. Tunde Molegbe. He's been here before. He's the MD of Arthur Stevens Stockbrokers. He used to be the past chairman of the Chartered Institute of Stockbrokers in Nigeria. So he's a perfect guy to speak. But as usual, we'll have Olumide here with us. So when Olumide is here, you want to give him the mic because Olumide can really break down these things for us in a way that is very, very unique to him. So Olumide, welcome to the party. How are you doing? Welcome to 2025.
Yeah, good evening, Kalu. It's been a great start of the year. We've seen the market pumping against all odds, and it's going to be a very powerful conversation. I'm also looking forward to ask some very unique questions, particularly the fact that we saw upsides in the public offer by Nigerian banks, but a number of Nigerians can't access their stocks yet. So these are some of the questions I'd like to ask them.
Yeah, and again, to Olumide, if you reviewed what's happened all through last year, the Nigerian banks as a subgroup of the NGX, they didn't do so well, right? They didn't really do so well. If you compare them with, say, oil and gas, you compare them with, say, industrials, you compare them with even insurance, the Nigerian banks were below 20% return, I believe. Do you know if this was because of that capital raise? Were they going high and then capital raise made them really come down? Or what do you think happened with Nigerian banks in terms of equity returns?
Yeah, good question, Carlo. So if you look at 2023, Nigerian banks did exceptionally well. So they had a solid start in 2024. Then we saw some moderation, recapitalization, windfall tax, different things at different points. Oh. But if you look at it at the dips, for example, for those that bought UPA below 20 naira, they definitely made more than 70-80% a year. Then you look at these stocks paid dividend. So when I looked at my banking stocks in 2024, the only sector that outperformed the banking sector in my own portfolio was the energy sector. Pretty much because I understood the price entry of these stocks. When Fidelity came in, if you look at the price Fidelity came in and what Fidelity is trading right, you almost made up of what you invested in. If you look at First Bank, when Femi Otedola entered into more equity stake at an average price of 23-24 naira, you have made like 30-40. So, Carlo, yes, you are right. You look at it on a year spectrum. But the intricacy is that Nigerian stock market really takes out the clear fundamentals. In fact, that you really need to understand that there are certain events that occurred in the year that really gave opportunity. So for those that bought any banking stock during the windfall tax saga, you are up by at least 40%. At least, excluding dividend. For example, UBA GT assets, their dividend was so powerful that basically it really helped me in the past year. So I think banking stock showed passive income. They outperformed, funny enough, they outperformed inflation. But if you look at it, like you said, the banking index as the collective point, they underperformed the naira devaluation.
Yeah, I mean, if you even just taking on your point, if you look at the dividend, if you bought the NGX dividend yield index, which are like companies that just pay dividends alone, you are really up about 124% if you just bought that. But the Nigerian banking sector, I think they're 21% return. That's as a group. But like you said, if you bought the individual banks, you got your dividends from them. I think they're 1, 2, 3 in terms of dividend payout to Nigerian banks. I think it's Nigerian banks that pay the highest dividends than any other company in terms of dividend yield. Yeah, perfect. Yeah, and again, I wanted also to give to talk about was the ETFs, the index in Nigeria. I see NGX All Share Index 36%, but I just want to understand how can we actually invest in these indexes the same way we can invest in, say, VTI, VOO when we go abroad? Is it possible for Nigerians to also invest in these indexes? What are the mutual funds we can invest in? Because folks want to invest, they don't have the millions to buy individual stocks. So are there these avenues for mutual fund investment and all that? And I assume that Tunde is here. So Olumide, hang in. I'm sure you have a few questions yourself. Dari, hang in. Let's get Mr. Tunde to unmute, introduce himself, and then we'll just get the party started. Mr. Tunde, go ahead, sir.
Okay, good evening, Carlo. Good evening, ladies and gentlemen. It's my pleasure to be here. My apologies for coming late. I hope I'm audible.
You are very audible, sir. Go ahead. Mm-hmm.
Yes. My apologies for coming late. It was due to exigencies of Lagos traffic, but I'm really glad to be here and glad to have the opportunity to speak to the topics which has been highlighted today. My hope is that it's going to be an interactive one. My hope is that I also get to learn a little bit as much as I'm able to also share the little knowledge that I have. So I'm glad to be here, and I hope that the session goes well.
Thank you, sir. We appreciate you being here. I mean, I've known you, sir, for decades, right? And again, you've been a bit humble. Mr. Tunde, again, like I said, he was the past president of the Chartered Institute of Stockbrokers. Lots of experience in the Nigerian market, tons of experience. So those questions you want to ask, he's a stockbroker. He can say things that I cannot say, right? So have those questions. You can DM, you can request to speak. He's right here. Like he says, he wants it to be interactive. So we're not going to talk too much. We're just going to go straight into it. So today, the Nigerian stock market last year did about 36%, right? What's your take? Was this a good return? I know it beat inflation. Was this a good return? Could it have been better? What was your take on 2024, the Nigerian stock market returns in Nigeria? Mr. Tunde, and if you can you unmute?
Sorry.
Yeah, go ahead.
Okay, thank you for the question. Broadly, given that 37% is at least some basis point above the inflation rate of close to 33%, we can give the Nigerian Stock Exchange, the Nigerian stock market, a pass mark on a broad basis. And that in itself is a good thing because if you look at it, the market has actually been outperforming in inflation, I would say, in the last three consecutive years. And what is also even more interesting this year actually is that the performance is coming on the back of very elevated interest rates. For some of us that know,
I think we lost him.
Was a little bit about finance. Hello, are you with me?
Yes, go ahead.
Yes. The performance the NGX has put in this year is quite remarkable, given that it is coming on the back of an elevated interest rate environment. Now, typically, when the interest rate in an environment is high, you do not typically expect the stock market to do well, because the relationship between the stock market performance and interest rates is typically inverse. At least that is what economists and financial economists says. But what we have seen in Nigeria is that while interest rate is going up, we still see stock market also doing well, which means that there might be some other the stock market performance not comply with theory, with known financial market theory. So that is what I will say for now. And I think that if you drill down even further, if you drill down a little bit further, beyond the 37% that the broad market performed, you saw some some sectors actually doing much better. I mean, I believe the insurance sector on its own probably did close to 150%. The oil and gas sector, taken on its own, probably did close to 120%. The banking sector on its own probably did close to 50%. So, if someone, for instance, had invested in ETFs or mutual funds that are heavy on those sectors, what you are likely to see is that those funds will have performed even much better than the broad market itself. So it's been a good year, and hopefully, as this conversation goes on, we'll probably be able to x-ray what are those factors that could have cost us to have a situation where the stock market is going up at the same time that interest rate in the environment is also going up, which is really, really an unusual circumstances. So let me leave it there for now.
But let me follow up on that. So if I have ₦1 million, am I buying insurance stocks because they are quote unquote penny stocks? They're like per share price is maybe like below ₦10. Is that why I'm buying those stocks because I think they are cheap? Or am I looking at the fundamentals? Because what is new in insurance? So I guess my question is, why did insurance do nearly 150%? Did any law get changed? Or did Nigerians simply look at the market and say, this is ₦3, I'm going to buy it because it's going to go to ₦6, 100% gain? What moved insurance to 150%?
Okay. We'll describe it this way. If you are buying insurance stocks in 2024, you are probably buying them because they were essentially penny stocks, and you are willing to take risks. And because the penny stocks are riskier, but they also deliver better returns, that is probably the reason why you are buying the insurance stocks in 2024. However, the consideration for investing in insurance stocks in 2025 will be different. Because what we are going to see in 2025 is that the circumstances of that industry is going to change. For one, the National Assembly have already passed a bill seeking to increase the partners of general insurance to raise that 5 billion. And then those ones practicing life insurance are probably going to have to raise their capital from 5 billion to 10 billion. So what you're going to see in 2025 is that, just like we saw for the banking, in preparation towards recapitalization, the share prices typically rise. So you're going to see their share price rising ahead of them coming to the market to raise fresh capital.
Oh.
Secondly, the regulation of that particular industry have actually changed significantly. To be that insurance regulation in Nigeria relaxed. Us essentially could do anything with the money that the premiums that they collect, which is the reason why sometimes you go there to go and make claims and you are not able to get your claims filled for 6 months. But what you find now is that you make claims in insurance company and within a short time they are eager to fill your claims because the regulation is much better. They are more disciplined in the way they invest the premium they are getting, and so there is a cleaner and stronger stronger industry.
Yeah.
So what you are going to see is that the trajectory in terms of return, the trajectory in terms of return for that sector is going to get better. All right. So if you are investing in insurance company in 2025, those are probably your consideration, other than the fact that they are penny stocks and you are looking to take risks.
Okay. Only me has a few questions. Let me just ask you my last question now. In terms of
hello,
yeah.
Hello?
Great, I hear you, Tunde. That was
Yes.
perfect response on that. That clarifies a lot. That just shows that there's more fundamentals behind this 100% return in insurance. Perfect. So my question is now, if I look at Nigerian stock market, is it these ETFs we talk about? If you look at the volumes, they are very, very low. That's for ETFs. Mutual funds tend to do better, but is that really a market in Nigeria, Ogatunde, for ETFs, mutual funds? Is that really a market, or should Nigerians just do their own personal mutual fund where they have a portfolio, they buy and they keep? Is it? If you ask me this question for America, I will always tell you buy an index fund in America because it's cheaper and it's diversified. Can I make that same recommendation to a Nigerian and say, hey, just go and buy an ETF? I see very, very low volumes and all that. What's your take, really, for a guy that has just 100,000 naira? Is this a good way for him to invest in Nigeria, ETF mutual funds in Nigeria, sir?
I will say that for a Nigeria looking to invest, say 100,000, or for a Nigerian diaspora that do not have maybe the time to do their own analysis and probably do their own stock selection and portfolio construction and management, you are always better off putting your money in index funds or ETFs. Because, I mean, to all intents and purposes, you get the opportunity of having the money managed by professionals on your behalf. The risk is diversified, and you will not have to suffer the limits in terms of the amount that a stockbroker will be willing to take from you to invest on your behalf. So, if you have 100,000. Or thereabout, or you are not resident here and you do not have the time to continue to be doing research on markets and securities, you are always better off putting your money in ETF. And you are correct. It's a market. The ETF market is what I would call a growing market in Nigeria. There are not too many out there. I think at the last count, the public ETFs that are out there are probably not more than 7, or maybe between 7 and 10. And I think that gradually now Nigerians are getting to be a little bit more comfortable with putting their money in ETF. And you are also correct. At the end of the day, it is always much cheaper for someone that does not have a lot of money to always to invest via ETFs, as different from trying to invest themselves, because it's by the time you look at transaction cost and all whatnot, you are better off going into ETFs. I think it is a growing market in Nigeria, and as more and more people start to embrace it, you will see it becoming more active. But for now, it is the volumes traded on ETFs and index funds is quite low, as you mentioned.
So, if I want to invest in an index fund or an ETF that just captures Nigeria, and this is not like the same way we have S&P 500. Now, which one should I buy that would capture Nigeria? I used to buy the one that was done by the foreigners, the NGX, but they've stopped it. The one that was done by the US guys, that was 30 stocks, but now they we no longer have it. They've closed it down. So, which one can I buy? Say I want to buy Nigeria. Which one should I buy?
I think Vetiva, I believe, has an ETF that is indexed to the markets in general. I believe Stanbic IBTC have one too. So those two firms I'm familiar with.
Yes, there's
have ETFs that has coverage for the entire market, such that you can expect returns expect returns that mirrors the performance of the entire market when you invest in such ETFs.
Gotcha.
So those are the two that I'm aware of.
Vetiva is VET. I think it's VET Goods. They have also VET Bank. Then
Yes.
for Stanbic is Stanbic. That's STANBIC ETF 30. So Stanbic ETF 30. So that's supposing
Yes.
that they're just buying the same 30 stocks that those foreigners used to buy. Because I remember those guys only have 30 stocks. So this should be a replication of that top 30. So
Yes, because those 30 are essentially put together constitute close to 70% of market capitalization. So if you invest in them, you are essentially taking the market as a whole, because the direction of those 30 tends to dictate the direction of the entire market.
Gotcha.
By the way, you don't need to go through them directly to buy. You can always buy them off Otto Stevens platform. You know, if you register, at www.ottostevensonline.com, you open an account there, and you can deposit your money and buy it directly yourself.
That's what I trade it. That's what I do.
CTFs.
I trade. I put the naira and I buy from you guys. Pretty seamless. Yeah.
Exactly.
Seamless.
So you can buy it off our platform straight away.
Gotcha. Let me get Olumide. Olumide, hop in here. You have a few questions for Tunde before we go to stock and Igala. Olumide, you got the floor.
Yeah, thank you, Kazu. Very interesting disposition. So I want to ask just 3 questions from him. So first of all, we saw the rally last year, and I remember he came in, was it 2023, that he told us that about 100 plus active investors took part in the rally. I want to know, though I have the idea of the number, I want to ask officially that those that took part in the 22 trillion and naira gain, how many active investors were involved? Secondly, the ETF, because I own the Stockbrokers 30 ETF, for example, and selling it at times it's difficult, Carlo, and because the volumes are low. So categorically, is it not fair for us to look at assets for beginners that really have fair value where liquidity is not an issue, particularly stocks like the banking sector, and we're already seeing liquidity in the energy sector? Then lastly, what is really going on with Orlando in terms of the fact that the body language was like, we had delisting, now it seems they're not delisting, shareholders are showing high discontent despite the fact the stock did over 500% last year.
Okay, thank you very much. On your first question, what I was trying to emphasize when I spoke to you, was it last year or 2 years ago, was that the total number of individual and corporate participating in the market relative to our population is still very low. So participation is extremely low. I mean, the total number, like I emphasized, the total number of Nigerians that have a CSCS account. What I mean by CSCS account is the depository account where people keep their shares, is about 5 million from a population of close to 230 million or thereabouts. So I mean, you can do the percentage yourself. You know, the total number of people that are in the formal sector. At least if we look at it from data of individuals that holds retirement savings accounts with the PFAs in Nigeria, the individuals holding a retirement savings account in Nigeria is close to 20 million. All right. So why are we having a population of 230 million people? At least 20 million of which are in the formal sector, at the very least, 20 million are in the formal sector. But only 5 million actually have an account. Not even active account, but actually have an account. Actually have an account where that enables them to participate in the equities market. While in countries such as the US, for instance, close to 67% of the entire population participate in the equities market in one form or the other, either via their 401ks or via mutual funds or via some other managed accounts. At at least 67% of the economy, which is the reason why the economy is doing as well as it is doing. Because the truth of the matter is that the more you get people to participate in the markets, the more you are able to aggregate savings, and the lower the cost of borrowing by corporations that needs these savings to generate production. All right. So, and that is why you will see interest rates in the US at 2%, 3%, 4%, while interest rate in Nigeria is 20%. All right, we are not using the stock market and other machineries to aggregate savings the way we should be aggregating savings. And if you do not aggregate savings, the cost of borrowing by the productive sector will be high. So we need to do better in getting more people participating in the equities market. Now, of the 5 million people that have an account, at the last count, I think about 500,000, to the best of my knowledge, are actually active. Actually doing trades on their account, or have had cause to do trades on their account. All right, so you can see even the figure even come down even further, and it shouldn't be. There is a caveat though. The caveat is that yes, we might have 500,000 people, having active trading accounts. We do not have a figure as to the number of Nigerians that are participating indirectly in the stock market via some of these mutual funds and unit trusts that are available in the market. And some of these mutual funds and unit trusts are quite large. Some of them have assets under management close to 1 trillion. All right. Some have assets under management in excess of 300 billion. So it's very possible that a significant portion of Nigerians have chosen to participate in the market indirectly via these mutual funds and unit trusts, rather than having CSCS accounts, by themselves and managing their own accounts themselves. My hope is that is the case. Or my hope is that is the case. Also, we must also bear in mind that a lot of Nigerians are choosing not to own dedicated portfolios by themselves because maybe their employers are paying money into their pension accounts, and this PFAs, the administrators managing PFAs, participates actively in the equities market. All right, so they might feel that, well, I'm already getting exposure to the equities market via my retirement savings account, so there might not be any need for me to own an account myself. But on average, to answer your question, I assume that more Nigerians, the number of Nigerians that have participated in the market between 2023 and now has increased relatively. But if you look at the larger picture, we can do much more. We clearly can do much more. All right, and I have a feeling that the regulators and the operators and the platforms are trying to make it easier for more Nigerians to be able to come in, open accounts and be able to trade on their own. And which is the reason why, nowadays, it used to be that in the past you need to actually physically go to the office of a stockbroker to fill out paper to open an account. Now that is not the case. Nowadays you can just go to the website of a stockbroker, and within 3 minutes, you open an account, and within 24 hours they'll put you in the market and you can trade by yourself, and they will give you the information. I mean, my own organization, within 3 minutes you can open an account from anywhere in the world, in as much as, of course, you have a BVN or you have an NIN. You can open an account within 3 minutes, and in as much as you have a Naira account that will enable you to transfer Naira, you can start trading on the Nigerian Stock Exchange within 24 hours. All right. So that's regarding that.
I'm not sure if I can hear.
The second question has to do with Wando, right?
Yes, sir.
All right. Well, you see, the issue with Orlando, there's still a lot of there's still a lot of what I would refer to as an information gap. You are correct that they had put out a circular. I think was it last year or 2 years ago, talking about wanting to delist and all whatnot. To the best of my knowledge, that circular has not been withdrawn yet. All right, but nobody is coming out to say, okay, look, is this delisting still going to go on or not? All right, and then of course there is this issue of they've closed their acquisition of Nigerian oil company and all of that, and all the other transactions they've been doing. And I think the news about closing those transactions is what have actually driven the price up to the level it is. But I will admit that there's significant information gap that needs to be closed. With Ohando for it to actually achieve its actual price. I feel that on a nominal basis, if you look at some of the transactions they claim to have done, it is very possible that the price should even be trading much higher than it is at the moment. But it's very possible that information asymmetry is making some knowledgeable investors to be a little bit wary about committing totally to the stock. So all I can say is that we'll look forward to them closing that information gap so that the company can move forward. If you just remind me about the third question, if you don't mind, please.
Okay. I was talking about liquidity in the
in the ETFs.
Yeah, but I think you've answered the previous. Just to repeat that, the public offer done by many banks, a lot of buyers are still complaining that they've not gotten their shares. I usually go through the secondary market, but a lot of Nigerians bought at the private market, and many of these stocks are done very well. So some Nigerians are constantly taking profit, but that has not been possible because they don't have access. What is delaying?
Well, the information we have is that what is delaying it is the typical capital verification that the CBN typically carries out post public offer like this. It was done also during 2015 when the initial recapitalization happened, but it certainly did not take this long for that to happen. So shareholders do have will be within their right to complain that the process for concluding the recapitalization and they getting their shares has taken too long and is taking too long. To the best of my knowledge, I think the SEC has done what they need to do on their side in ensuring that the requisite approvals are given to enable the market to enable those banks come to the market. But you realize that the banks are not only regulated by the SEC, they are also regulated by the CBN. And at this point, I believe it is the CBN that is carrying out the capital verification exercise that seems to be causing the process to slow. But I feel that gradually now we are seeing some of them come up with the allotment announcement. I believe Fidelity have announced. I believe GTB has also announced. I think Access Bank have also announced. Those three banks have announced the basis of their allotment. So I suspect that within this week and next week, shareholders should expect to start seeing some of those shares credited to their CSCS account for those ones that have announced, while we are with the other ones.
Okay, Tunde, if you don't mind, we have tons of questions for you. I'm going to try to ask you a question, then go to the speaker. So I have a question here from Joy. She's saying, what is the payout for ETFs? Is it quarterly, semi-annually, or annually? I.e., if I buy the ETF Vetiver 30, when will I get my dividends paid to me? Then she's also doing a follow-up. She's asking, what is your take on REITs? That's Real Estate Investment Trust, and where do they fall under? So she wants to know what's your take on REITs and where they fall under, and if she buys these ETFs, when will she get her dividends? Is it quarterly or when they announce? Just if you could help her out, then we'll go. After her, we'll go to Igalaman. Thank you, sir.
Okay. For the ETFs, you will need to get a little bit more. Depending on the one you invest in, you will need to get a bit more information as to their dividend distribution policy by the managers of those of the ETFs. So some of them have a policy of distributing quarterly. Some of them have a policy of distributing half yearly. Some of them have a policy of distributing annually. So it depends on the policy stated by the managers of the funds, and of course it also depends on the nature of the ETFs that you have bought. If you have bought an ETF that is heavy on stocks that pays half yearly dividends, then it is very likely that you are also going to be getting distributions half yearly. So some stocks such as GTB, Zenith Bank, and the likes pay dividends twice a year. All right. So if your ETFs is heavy on such stocks, chances are that the managers will also choose to pay you dividends half yearly. But if you have bought ETFs that are heavy on securities that only pay dividends once a year, it's also very likely that you are going to be getting distribution once a year. All right, so that's what I can say regarding that. REITs are also collective investment schemes. They are similar to mutual funds and unit trust. All right. It's just that the difference is that they are investment trusts. Unlike mutual funds that if you buy and you have cost to redeem, you will have to approach the managers to redeem your investment for you. For REITs, most of them, if you need your money, you are probably going to have to trade those REITs on a platform. You probably have to trade those REITs on a stock exchange. All right. So you buy them on the stock exchange through your stockbroker, and if you need your money and you need to sell them, you also sell them through your stockbroker. And of course, REITs like mutual funds and unit trusts also pay out distributions either half yearly or quarterly, depending on the distribution policy of the issuer of the REITs, as the case may be.
All right, perfect. Thank you so much for that. And I know in the US, REITs have to pay out almost 90% of their revenues to qualify for tax advantages. Is that the same in Nigeria? Do they also have to pay out a lot of their dividends to qualify? Is that the same?
Most of them pay out the bulk of their dividend after the managers have removed their fees. Most of them, because they are most of them are exchange listed. They know that dividend distribution also encourages investors to want to put money in them, and it makes their instrument more liquid. So they have an incentive to pay attractive distribution. So most of them do pay their distribution that are close to what their earnings are.
Okay. All right. Perfect. Let's get Igalaman, sir.
Hello, good evening, everyone. I appreciate this call this evening. So I've got two questions here. As we got the REIT too, I wanted to ask someone asked. So in terms of the risk regime, what do you think? What risk do we think REITs pose in Nigeria? Considering that real estate is growing in Nigeria from Lagos, Abuja, Owerri, Enugu, etc. Real estate is growing. So I do not know the risk regime for REIT. Maybe you can just revisit that for a second. Then my second question is data sharing between CSCS, SEC, and the PFAs and the ETF managers. Do we have a current architecture that share data between the PFAs, the ETF managers, the CSCS, and the SEC?
Okay. Thank you very much for the question. Regarding the rates, the truth of the matter is that there is no investment that does not have investment risks. And if you look at it historically on the Nigerian Stock Exchange, the rates that we have had listed have not actually put off very stellar performance until recently. Okay, it might have to do with the managers. It might have to do with other factors. For instance, UPDC, that is a property arm of UAC, had the rates that did not do very well. But I think they are trying to restructure it now that the real estate market seems to be picking up again. I know that Union Homes, which is a division of Union Bank, also had a rate that didn't do well in the past, but it seems to be doing better now. And I think there's Sky Rates, and that is doing very well. It's doing very well. So what we are seeing now is that now that the stock market, the truth of the matter is that the real estate market in Nigeria is quite volatile. When people have liquidity, then the real estate market will do well. When the economy is challenged, then of course the real estate market will typically not do well. So now that the market seems to be a little bit more liquid, and government is putting in place some arrangements that enables property managers to be able to provide some sort of mortgage to buyers of property. What you're going to see is that the real estate market is going to continue to do pretty well, and I will assume that REITs that are structured to play in that space will also do well. Consequently, on the issue regarding data sharing between the NGX, the SCC, and the PFAs, I can assure you that the data sharing between the NGX and SEC is probably almost complete. It's probably almost 100%, because of course, the NGX themselves is regulated by SEC, so the SEC could always request any information they want from them, and I assume that they probably get all the information that they need. All the information that they need on a real time on an online real time basis. Now, regarding information sharing with the PFAs, that is probably a different kettle of fish. What I know, of course, is that the NGX has a portal that has comprehensive data there, and typically what they will expect is that any interested market participant should subscribe to that portal and be able to get all the information they require. So I will assume that any PFA that requires information will typically have subscribed to that NGX portal to get those information that they need, or sometimes they also subscribe to Bloomberg, of course. Bloomberg also have an agency agreement of some kind with NGX. Where they provide this data to Bloomberg so that the local PFAs as well as the international investors are able to obtain this information directly from the Bloomberg terminal.
Perfect. Tunde, thank you for that. Tunde, I'm looking at the Nigerian stock market in terms of highest dividend yield companies. Number one there is a company called Smart Products Nigeria PLC. They've been here since 1966. This used to be what's called Associated Press. Is that Daily Times? Who is this company? Do you know them? Smart Products. They used to be.
I've not studied them. I'm not really sure what they do. And so it's not the stock, it's not the company we are following at the moment.
Yeah, I'm just surprised. 1966. So clearly, it's a company that has changed its name, and it's now associated. It used to be Associated Press. I suspect it's Daily Times, but I'm not sure. But I'll leave it there. And again, today there's a company called STS. That's the SFS Real Estate Investment Company. That's also the
That's
one.
it.
Yeah.
That's the Sky rates I just mentioned.
Correct. Yeah. Very very high.
Rates.
Very, very high dividend payout, 14 naira. In terms of yield as well, they are competing with the banks. The number one dividend paying stocks in terms of dividend yield, UBA, then Zenith, and I think they are also competing there. So just want to put that out for the guys I was following. Let's get Man of Steel. Man of Steel, you've got the floor. Tunde is here. What's your question? Go ahead, Man of Steel. Let's.
Thank you, Mr. Kalu.
Yeah, and after you, sir, if just so put ready. After you, we're going to get Stock Bubbles, then we'll get Bishop. Just be ready. So please go ahead, Stock Bubble and then Bishop. But Man of Steel, go ahead, please.
All right. So I'm standing on the existing protocol. So my question is this: looking at the capital markets, we all know that the most traded stock is the financial industry, particularly the bank stocks, and they are the backbone of Nigerian Stock Exchange. So, with the mandate of the CBN governor of achieving a $1 trillion economy, and all the banks are being asked to recapitalize, which Mr. Olatunde spoke about, and post allotment now, could this be an indicator that in 2025 there might be a bubble burst? Because we still have other banks like Lotus, Chase Banks, and other banks who are still in the process of recapitalizing, and when a full industry is being revamped, so it might be an indicator that what the policies makers are trying to achieve might impact the capital market. I don't know if there are other indicators that show otherwise. I just want to know.
Well, okay. I think I'm trying to understand what you are really asking, but let me guess. I think your concern is that because there are other banks that have not come to the market to raise money, those ones might fail in the recapitalization target, and they could fail. Is that what you're asking?
No. In part, what I want to know is, because bank stocks are the most traded stocks, and when bank stocks go down, the whole capital market feels it. And now we have the share price of most of these banks, they've gone skyrocketed, except Access Bank that trades around 24 naira thereabouts. So all the banks are having their share price at a premium. Could from 2024 that the news came out to 2025, could that affect the capital market from going from this bullish market to a bearish one?
Okay, let me give you my own perspective regarding that. Typically, the asset of banks is naira. All right. Now with the recapitalization now, at least the ones that have succeeded in raising money, what has happened is that they've gone from big to bigger, meaning that they have more money to operate with. Secondly, because the interest rates environment is elevated and they have more money, it means that they are likely to earn more income, meaning that they are likely to be able to pay more dividend than they be paying. And in as much as they are able to pay more dividend, the chances that their share price will come down could drop precipitously is probably very little. Not to say that there might not be a correction along the way. Don't get me wrong. I mean, the stock prices go up and down. That is what it does. I mean, if you have a situation where prices are only going up and not coming down at some point, then that would be unusual. So we might see a correction at some point, but I do not see a crash, simply because I do not see a bubble, particularly in the finance sector at the moment. I do not see a bubble. I think that the gains that the finance sector have seen in the last 1 year is actually in response to the fact that post recapitalization, these organizations are going to be much bigger and they will be more profitable. And so that response is just appropriate. All right. So we have not seen a situation where, Zenith Bank, for instance, I believe the share price was 34 naira or thereabouts prior to recapitalization, and the share price today is 46. That to me is not a bubble. All right. The same thing with Access Bank. I believe pre-capitalization, the price was about 19 naira or 20 naira or thereabouts. It's at 24 today. That for me is not a bubble. And we are talking of companies that are already making pre-tax profits of close to 1 trillion naira. Close to 1 trillion naira in their half year. We have not even factored in the new monies that they have raised, which some of them have already started working with. So I do not honestly see a bubble in the finance sector for now. I can see a correction along the way, which is natural, but not a crash. This is my own take on the issue.
Okay. All right. Well said, sir. Well said. And again, just to clarify, you had mentioned, you and Olumide had talked about the public offers that have not yet, people have not gotten their certificate. So lots of folks are asking about that on DM. Again, just to emphasize, Tunde has said, again, some have started to come out, i.e. the allotment numbers have started to come out, and this is now a precursor to those actual certificates being posted out. So it's been delayed because they're verifying the allocation, but now I think we should start to get those certificates out because the allotment has been published. So just hang in there, guys. Just answering those guys at the DM questions. Okay, so we've got a stock bubble. Tunde's stock bubble has a question, and I like the app. It's if you're not following this app, I think it's a good way to visually see, the size or the performance of stocks by just looking at the size of the bubbles. I do like it. I like what he's doing. So, Stock, what's on your mind?
Thank you very much. Can you hear me, Kalu?
Yes, I can. Go ahead.
Okay. Well, it's a privilege to be here. It's the first time I'm actually going to be talking in your space. I've been following for more than a year, and you, Olumide, and a few other faces here have been the inspiration behind what I'm currently doing. So I started reading your book, and I got into learning about the Nigerian Stock Exchange, and then followed the rabbit hole inside. And that was where I saw the need to actually have a tool that I'll be using as a private tool to be monitoring the markets as well, because I'm also invested in it. So that was the creation of Stock Bubbles. But I'm not talking about Stock Bubbles now. What I wanted to talk about was just on the ETFs. So the ETF is something I realized that after I got data from the NGX, which is real time, I noticed that we also have information on traded debts and debt instruments and also ETFs. For now, currently, we have 12 ETFs that are traded through the NGX platform, and all of them can also be monitored on the platform if you go on it. But I can also share it with you, Kalu, so that you can share it with your audience. It has information of all the ETFs, what they are tracking, a description of what they're tracking, and then a link so that people can also make sense and maybe tap into the benefits that ETFs give. I know you're big on ETFs, Kalu. In your book, you talked about how, they are a form of diversification, right? It has the benefits of mutual funds and all that. And I was also very interested in it, but disappointed to see that we have just a few and they are not tracking enough. Even though we have lots of diversification, we have growth stocks. Some of them are tracking gold, and one of them precisely. Some of them are tracking the banking index, consumer goods. So there's still something for investors to look into when they want to, if they are considering ETFs. Yeah, that's my take.
I would love if you share that. I will, of course, share to everyone. Again, just to be clear, guys, if you're a new investor, I think today and Olumide have emphasized that if you're a new investor, right, they're like in Nigeria, maybe like 300 shares. In America, more than 10,000. How do you start? How do you do your fundamental analysis? You really can't. So you've got to learn slowly. And I don't think you should wait. Like if you wait, you're losing compounding. So the best way to get into the market that gives you diversification and allows you to invest into the market with very, very low amount of funds is to buy a mutual fund or an ETF. What's the difference? The ETF trades during the day. No difference. Exchange traded. So you're buying a portfolio. That's all you're doing. Nothing complicated. Instead of you buying one stock, you are buying a basket that owns 100 stocks, and then you are diversified. Is cheaper for you. That's all it is. So nothing complicated about this at all, right? Okay, thanks, Bubbles. Let's go to Bishop. Bishop, you've got the flutter. Bishop would go to OD and Dynamic. Bishop, go ahead. Bishop, you've got the floor. All right, let's go to Dynamic. Dynamic, please go ahead. Dynamic, can you hear me? Tunde, let me just go to some DM questions for you. Tunde, someone is asking, what is your view on NASCON and Dangote Sugar? I invested in these two. I just want to get your take on NASCON and Dangote Sugar.
NASCON and Dangote Sugar, if I will look at the questions on an individual basis. Mm-hmm. And then look at, what is going on together. Obviously, NASCON and Dangote Sugar are two companies that are into consumables. And their products, if you look at salt and sugar in Nigeria, their products are essentially inelastic because people will always use salt.
Salt and sugar.
And obviously, people will always use sugar. Okay? So the beauty of selling products that are inelastic is that you get the opportunity of increasing prices and not getting customers punishing you. Really, because they really can't do much without your product. And also, if you look at those two companies, NASCON, I think, probably controls close to 70% of the market. Dangote Sugar possibly controls close to 60% of the market. All right, so those are two companies that will continue to do well on the face of it. Now, the challenge the two of them, of course, have faced in the last one and a half years is the same challenge most companies producing consumer goods are facing, i.e. cost-related concern, finance cost-related concern because of high interest rate. And of course, for some of them that have import contents, maybe they have to import raw materials or they have to import machineries and co. Because the exchange rate has been so high, most of them are having to take devaluation cost, significant devaluation cost, which is the reason why you have seen that Dangote Sugar and NASCON have not been able to pay dividends for the last 1.5 years. And it's also very likely that they might very well not even pay dividend this year. But I think that by 2025, 2026 fiscal year, it's very likely that they will have adjusted their prices that they will have taken. They will have. Sorry, hello, can you hear me, please?
Yes, you were up, but you're back on.
All right. They will have taken cognizance of the higher finance cost and also have taken cognizance of the devaluation.
Yeah, Tunde.
The income will probably start growing, such that they are able to start paying dividends again. So if I'm an investor in those two stocks, I will be patient if I can. But if I can't, then you might consider switching the investment to other stocks that probably do not have to deal with this issue of higher finance cost and devaluation expenses, and then come back to these stocks later. So that is, those will be the two considerations that I will put in front of any investor that is asking me about those two stocks.
Tunde, let me go.
Now,
Tunde, let me go a bit.
I think was it last year or 2 years ago, there was also a proposal by the Dangote Group to actually merge those two companies. All right, along with Dangote Rice, because NASCON is owned by Dangote, Dangote Sugar is owned by Dangote. They also have Dangote Rice, so they wanted to merge. They wanted to merge those three companies and become Dangote Foods. There was a proposal presented to the SEC regarding that, but I think that there were some technical issues that made that combination impossible. I think that if they had gone ahead with that combination, then the existing shareholders for those two companies will have benefited greatly from the merger. But for now, that merger has been put on ice. I think they are trying to sort out their technical issues internally, and it's very likely that they will probably launch that effort and merger again very soon. When, honestly, I cannot tell. But I think that ultimately that is what will happen. Thank you.
Tunde, I have a follow-up question to that. If you look at the financials for Dangote Sugar, it's a very, very interesting.
Hello?
Yeah, Tunde, can you hear me, Tunde? Olumide, can you hear me?
Sorry.
Olumide, can you hear me? Yeah, I think Tunde can hear me.
Loud and clear.
Yeah, I don't think Tunde can hear me. Tunde, can you hear me?
I can't hear them.
Yeah, he might have to.
Hello?
Yeah. Tunde, let me send you a DM to log out and log back in again. Let me take him off. I'll take him off and I'll add him back again. So I remove from speaker. So he's off, and I will try to add him back again. Invite him to speak. But what I wanted to ask Tunde, maybe I'll wait when he comes back. If you look at Dangote Sugar, it's a very interesting company. They are not making any money. Revenues 188 billion. Cost of goods 187 billion. They're not making any money.
Hello?
Tunde, are you back? Can you hear me now?
Yes, I'm back.
Okay, Tunde, I was going to ask you about the Dangote Sugar specifically, about the way the company's financials. Just talk to me as an investor. This company is making 188 billion in revenues. Cost of goods 187. Their profit is 1 billion. They've made no profit. Net income since 2023 negative. Since 2023, debt has ballooned in quarter 3 2024. So they were just borrowing about 61 billion in 2024 quarter 1. Now as at quarter 3, they're about 621 billion. So the company is surviving on debt. Everything the company is selling is just equivalent to what it's costing it to sell. Is this really a company? I mean, I hear what you're saying about this company imports a lot of sugar. I heard Nigeria imports 100% of the sugar we make. So is it so expensive to import sugar, bag it, and distribute? Is that what's costing? Because this company, I do get what I'm going to with this company. It's really, they make 10 naira, they spend 9 naira 90 kobo to make 10 naira. And then they have a huge debt over land.
Cost of sale is 9 naira. I get where you're going. I get where you're going. I get where you're going. And I think that, the company is suffering from a bit of unfortunate the company is suffering from a bit of unfortunate timing. Because I believe, was it about 3 years ago they had announced that they were going to do some major backward integration. I.e., I think they were buying some. I think they bought Savannah Sugar, and they were going into massive sugarcane growing, and so that at least they can start producing their molars and some of their raw materials locally. And I think that this is what drove the need to borrow as heavily as they have. Unfortunately, the rise in interest rates also meant that the cost of borrowing has risen significantly. So what you are seeing is that the bulk of what they are making is being eaten up by the cost of borrowing. The borrowing which they did majorly because of the backward integration they are doing. All right. So you will only start seeing that company being profitable by the time we start actually seeing the fruit of the backward integration. Because what it will mean is that if they are now producing the sugarcane locally and the molasses and all of that are being produced locally, then there will not be any need. There will not be any need to import raw sugar to refine and bag. Okay. Which of course will also reduce their need for foreign exchange.
Gotcha.
Which automatically will also reduce their devaluation expenses.
Today, let me put you on the spot. Just as an investor, people are listening. If I see a company like this, because what I hear you say is that, listen, the company is going through issues because they have a huge cost, but they are investing in backward integration. So if I put in a Naira today, I'm not going to get a Naira tomorrow. Is this what we call a dip? Am I buying a value company at a good price at this today? Or should I wait when this company has invested and then, of course, these things happen? When do you... this is putting you on the spot. When should I buy a company? Because I know this company has got potential. They've got, like you said, the farms, they've got the factory, they've got the ports. Should I invest today? Or should I wait till this company shows me margins? When should I put money into this company?
It's not comes down to what sort of investor you consider. What sort of player you consider yourself to be in the market. If you're an investor, you see this potential that is presented by the fact that they are doing backward integration. It would be wise to go in now because that there's light at the end of the tunnel, right? All right. So you know that you are going in. You are going in at the bottom, but it also means that you have to be patient. Okay. All right. So the capital capital you are going to put in has to be patient capital.
Not
if,
trading.
however, if you are a trader, you might not think it wise to put the money in and be waiting when you can actually use that money to trade. And hope to come in again at the time when the company starts showing results.
Gotcha.
The only problem with that is that at the point at which they start showing the results, you might not be able to get the shares to buy at this price anymore. You might have to buy at a much higher price.
The share price is about 33 Naira right now. 33 Naira right now. Okay, gotcha. So people are waiting. We have Dynamic. Let's do Dynamic, then we'll do Ben, then we'll do Steven. So Dynamic, Ben, and Steven. So Dynamic, you've got the floor. Please go ahead. Tune is waiting.
Good evening, everyone. Am I audible, please?
Yes, you are. Please go ahead.
Okay, so my question is based on considering the performance of what we saw in the Nigerian stock market in 2024 and the broader macroeconomic conditions. How do you think the incoming monetary policy reforms that we had last year will reshape some specific sector valuations, particularly industries like the banking and consumer goods that are very sensitive to both inflation and they're both sensitive to inflation and currency volatility. So are there any overlooked opportunities or risks that these sectors? Are there any risks that these sectors we should consider? And should we pay? Should retail investors like us, should we pay closer attention to these opportunities that we see in front of us?
Okay.
So that's my question.
All right, good question. Tunde is asking, what's the overhang? Monetary policy, rising rates, all this borrowing. I mean, I think what it's asking that what will happen to the market vis-a-vis this policies that we're seeing from the monetary side. They are chasing inflation, and inflation is still high. So what's really going to happen? Yeah.
I'll give you my own prognosis of what I think will happen, what is likely to happen 2025 regarding monetary policy. I think we are getting close to the peak regarding raising of rates by the MPC. We are getting close to the peak. I think that with energy prices stabilizing, we are probably going to see inflation rate start to stabilize. Maybe not drop significantly, but we are probably going to see a stabilization at a particular level. And that will probably be the impetus for the MPC to consider altering rate increases, or maybe even start to drop them gradually. Don't forget that what is also happening in the global market also have a bearing on what happens to us locally. So if interest rates continues to come down in the international market, with Donald Trump and his crew coming in, then we could very well see a situation where interest rates starts to either stabilize and come down or come down. The implication of that, of course, typically is that if we follow conventional financial financial economy, if interest rate starts to drop, then we should expect that the stock market to start gaining for. Because typically what happens is that the companies operating, it means that the finance cost for the companies operating in the market is likely to come down. And if they are able to maintain their level of operations, then their profit is likely to rise. So if my prognosis of lower interest rates is true, then we could very well see a lot of those companies in the stock market do better than they did last year, and we are likely to see the stock market continue to do as well as it's been doing.
Anthony, you mentioned Donald Trump. If I know anything that I think is going to happen in next maybe 24 months, I know Donald Trump is going to make rates go down. When I'm using, see the words I'm using, make. If it means him fighting or sacking the Fed chairman, he's going to drop those rates. He needs those rates to go down for growth to happen in the United States, And so right now, the U.S. has got these deficits in trade, and and the dollar is very, very strong. Trump wants the dollar to be very, very weak to push trade and to allow folks to borrow. Rates in the U.S. right now is 4%, 5%. We do a CD, it's very high. So he needs to get that rate down. And I don't think he will care about inflation. He wants to fight inflation with the oil, with pumping more oil, so reduce the cost of gas, so that then drives down. So if what you're saying is true, if U.S. is able to increase supply, there will be peace with Russia. They're already saying Putin and Trump are going to meet in Switzerland to discuss peace. Ukraine says they're going to sort of agree with the peace terms. If he's able to do that, then Russia comes back to pump oil prices go down, inflation goes down. So that means Nigeria will then see that knock-on effect, which is what you're saying is going to happen. So That's a word right there for, I agree with you. That's your prognosis, and I agree with it, yeah. So someone is asking me, Labi is asking, before I go to Ben and Stephen, Labi is asking that, what's your take on oil and gas sector in 2025? Will upstream companies benefit from the PIA considering their recent acquisitions? So just a short liner on what you think, what's the outlook for oil and gas? 2024, they did very well. Will that continue into 2025?
Mm-hmm. I think that that is a sector that is on the cusp of doing great things, because the truth of the matter is that they've been clamoring for the regulation for decades, and now that is an industry that I've now seen total and complete deregulation, at least on the downstream side. There's total and complete deregulation, coupled with the fact that supply, for which they used to rely on importation, they now have local supply. And so that's a double whammy for that industry, and a good double whammy, because what it means is that they now have reliable supply, other than having to wait till barges come from abroad with refined products, and having to wait for NNPC to give them supply, to give them allocation and all whatnot to sell at their stations. They can now approach multiple refiners within the local economy to get supply, and actually even compete regarding price. Secondly, they are able to sell at a price that ensures they are able to break even and make reasonable profits. I've had to drive from Lagos to Kwara State this morning and back, and I took note of the various prices we could see along the way. So in Lagos, you see petrol stations quoting petrol at 9.25. By the time you get to Ibadan, you see those same petrol station, the same brand, quoting at 9.45. By the time you get to Osun State, it's 9.60. By the time you get to Kwara State, it's probably 9.70, 9.80, which means that the prices are reflecting the distance that the supply has to go in order to get to the customer. So we have complete regulation and better supply. So that is an industry that I think will do very well, in 2025. So the stocks in that industry will constitute some of my top picks in terms of the stocks or securities that I will invest in 2025.
Like which ones?
Well, I mean, I like Total Energy a lot, though some will argue that the share price has risen significantly and has probably factored in the opportunities that is available there, because, I mean, the stock opened 2024, I think, at about 300 plus or so. It is close to 600 plus today. But I still feel that even at 600 plus, it still has significant potential, because the truth of the matter is that because it is managed by foreigners, we can assume that it is better managed than they have better corporate governance than some of our local downstream players. Secondly, the number of shares in issue of that company is very small. I think the total number of shares that they have in issue is less than 1 billion, about 680 something million shares. And they've maintained that number of shares for close to 20 years. So they have not been issuing so many shares, which means that the higher their profit, the higher their earnings per share. All right, and that is the company that's been known to pay out a significant portion of their earnings as dividend. Typically, they will pay out close to 80% of their earnings as dividend. All right, so I like Total Energies because of some of those factors I've mentioned. Aradel is also a good company. Though they are in the upstream sector, but they are growing and they are growing very fast. I think that their acquisition of Shell's downstream business makes them automatically makes them one of the big players in the marketplace in that particular space. So I like Aradel. Eternal Oil is also a good one, to the best of my knowledge. Though they might not pay as much dividend as the other ones, but MRS will also do well. Though the stock of MRS delisting, I do not know where that is going. But those are the ones. As I mentioned, if the information gap that investors have, then of course Oando will also be added to that basket.
Perfect. And thank you so much. Let me get done. We'll do Ben, we'll do Steven.
Okay.
And then we'll come to still Big Josh. Lots
Hello.
of questions today, so just stay with us, yeah.
Hello.
Who? Tunde, is that you?
Hello.
Tunde, I can hear you. Can you hear me?
Hello.
I think I've lost him again.
That's not Tunde. I think that's Ben that was trying to speak.
Tunde, can you hear me? Tunde, I don't think he can hear us. So I'll have to take him off and put him back onto the page again. Tunde, I'm going to put you off. I think I'm going to take you off, then just bring you back up again. So that way you can just take you off. And there you are. And then I'll ping you back on again. There we go. So just do Ben, Steven, and then Big Josh once he's back. So we just have, Then of course, then the rest I'll just, when we come. Tunde, I'm just going to add you. I already invited you to speak. So once you accept, we can get those questions in. Lots of questions, guys. I can't keep up with DMs. Let me share the ETF by Stock Bubbles. It's just something with us here. It's basically a table that shows the ETF company.
I went off for a bit there. I don't
yes,
know
Tunde, we heard everything you said, but when you finished, then you couldn't hear us. So that's why I put you off and put you back on. I think it's your network, but you're back on. So let us go back to the queue. We've got Ben, Steven, and then we've got still Big Josh. So Ben Awoks, go ahead, please.
Yeah, good evening, Carlo. Good evening, everyone. Standing on existing protocol. I'm Ben Awoks. I'm a strategy consultant. I have a few questions. Just think about two. I followed everything you just said about the energy sector because I'm very big on the energy sector. You know, obviously as an investment, but as a major vehicle to drive economic growth in Nigeria. I think that sector is very, very crucial to the growth of this country economically. So, you were mentioning some stocks. My first question was, although you've already partially answered it, as you just spoke recently, what you said on energy, you already partially answered a part of my first question, but it was really just about what your projections were about the energy sector. And to be specific, some of the local players that were just involved in some of the key divestment deals, Slepat Energy, Aradel, at least the ones that are listed, and some of them that were part of the consortium that bought the SPDC are not really listed, but Aradel, which is the key, Aradel is the key driver of Renaissance. It is listed, Seplat, Oando, and I think you spoke about Eternal. So I just really wanted to know your projections for these companies, how they're going to perform in the equity market in 2025. What we can expect and what we can project. And then my second question was on the derivative markets. I know that the NGX added the derivative market to their platform. I don't know. I'm not going deep into that, but I just really wanted to know what your thoughts are on derivatives or commodities markets in Nigeria, and also if you can connect that to the energy sector, because I know energy is one of the Energy is one of the sectors that plays a huge role in a very active derivative markets. Because a lot of companies in Nigeria struggle to hedge on forex risks. They struggle to hedge because we don't really have a functioning derivatives market for companies to be able to hedge against FX risks. So those are my two questions: the derivative markets and connecting that to the energy sector, as well as how certain locally owned energy company stocks will do in 2025. Thank you.
Okay, thank you very much for that question. I would typically try to stay away from predicting potential return numbers to try and say, okay, look, I expect this one to deliver 30% or 40%. I typically try to stay away from that because at the end of the day, there are factors outside of fundamentals that affect stock prices, and most of those factors are outside of most of our control. So my philosophy typically is to establish that the stocks I'm selecting have the sort of fundamentals that I like, and the stocks, those stocks in the oil sector which I've mentioned, are the ones that have shown the kind of fundamentals that I like in terms of management, in terms of turnover and other ratios. So, and that for me should be good enough for any investor. What will now be left is your point of entry. At what point do you want to enter? That is the point at which you will now be looking at, okay, look, what is the price earning ratio of this company, for instance? All right, and what is the dividend yield at this price I'm going in, and what dividend yield am I expecting to get from this company? All right, so if, for instance, Total paid 25 naira, or is it 22 naira or thereabout dividend last year, and you are projecting that it's very possible that dividend might grow to 50 naira this year, and the share price is 600 naira, that might mean that the dividend yield is 10%. You have to ask yourself, are you comfortable with a 10% dividend yield, or are you looking for a dividend yield that is better than that? All right? And then you have to also add to that question that beyond the dividend yield, is there a prospect for capital appreciation? All right, so that you can be able to take a decision regarding your expected total returns. So if your expected total returns is 25%, you can now compare that risk vis-a-vis what you can get from other potential source of investments, and then take a decision as to whether you want to invest there. But that the oil and gas sector as a sector, to the best of my knowledge, has very, very, very solid fundamentals now, simply because the circumstances of that industry have changed significantly in the last 1.5 years, due particularly to the regulation. And by the way, I will add the fact that also is likely to happen to the telecom sector very soon, because you will see that in the last 2 years or so, Airtel, MTN, and co have not also been able to declare dividends, simply because they've not had the opportunity to adjust their price to reflect market circumstances. And we are already seeing a situation where they are already telegraphing the possibility of
Tariff hike.
Now, if I'm an investor, what I would do is to try and position myself in that particular sector, because whether we like it or not, that tariff hike will come, because we cannot afford a situation where that sector collapses. All right. So this is my own this is my take regarding your first question. On the issue of I think you mentioned the issue of derivative market. Yes, I think the derivative market on the NGX kicked off last year, and it is still nascent and it's still growing. Though they've not done very much, but I figured that there will be more transaction there for this year. But regarding companies edging their FX risks, I know that a lot of companies that have knowledgeable finance managers typically approach the local banks to buy FX forward and FX futures to hedge their risk, and a lot of them are actually able to buy these forwards and futures on the FMDQ market, not the NGX. So, I mean, you have to be sure that your finance manager is knowledgeable enough to know which market to go to in order to be able to buy these instruments. But they are there. These instruments are there. They are probably not necessarily there on the NGX, but they are there on the other markets, the OTC market, the FMDQ markets, where they can get those instruments to buy to hedge their FX risk. Thank you.
Excellent response, and again, because I was going to ask you, I had two questions for you on MTN. So I think you've already answered that, because the new tariff allowance now gives their revenues more, should we say, flexibility. So we hope that will then translate to revenues, which then translates, of course, to dividends payouts to the shareholders. So you've answered that MTN question, but I have a question on tantalizers. But let's take Stephen and still Big Josh, then we'll come back to tantalizers. So Stephen, you've got the floor. Stephen going once. Still Big Josh. Are you there, sir?
Hello, Carlo. Can you hear me?
Yes, I can. Please go ahead.
Okay. I think you've answered my question, but I would love to ask again.
Yeah, it was a good question. I think you should ask. It was a good question. Yeah.
Okay. My question is about the multiples of some NGX ETF, specifically the Stanbic 30 ETF. What I noticed was when I bought into the Stanbic 30 ETF, it was around 600. But during that time, I wasn't knowledgeable enough about NAV and net asset value and all. So when I did some research and I found out the NAV is actually 200, but now it's 223. It's trading at 2x multiple. Meanwhile, if at that same time I got the VOO and the QQQ, they were trading at 1:1. Like you are getting the exact book value of the amount you're putting in. But these rules seem to be different with Stanbic 30 ETF. Why is it that way? And the other thing I noticed was the Vetiver Griffin 30 ETF is trading at 1:1. There is no disconnect with that ETF, and both ETFs track the same index. Why is there a disconnect between the two?
Okay, I think that it probably is two possibilities. Either the fund managers
I know I'm not hearing Tunde. I'm not sure if anybody else is.
I think the platform is buggy. We're going on and on.
Yeah. I mean, that's a great question. I mean, he's asking, if you look at the NGX, if you pick VOO, i.e. an American ETF, and you compare the returns you get with let me make it very simple. If you buy 5 stocks, those 5 stocks average as what you see as a net asset value in America. But I think what he's asking, if you buy the same 5 stocks and ETF in Nigeria, you're either going to get at a premium or at a discount, but usually at a premium. So why is there a added cost on that Nigerian ETF? I think that's still, did I say or ask your question better?
Yes.
More or less. And I think how I answered it was because the composition, let me take Tunde off. Tunde is going to have to come back off and on again. I think it's the composition of the ETFs that is the problem. Let me just make you, is the composition of the ETFs, because folks are buying one particular stock in excess of the PE. So then that premium bleeds into the ETF itself. So what I mean is that if I buy Dangote sugar or if I buy Dangote cement, even if it's as an elevated price.
Hello?
Yeah, Tunde, you're back on. Perfect. So we lost you. I don't know, Tunde, if you can start from the top again. Yeah.
Yeah. So number one, update of information is also very critical. Is the fund manager updating the information on a real time basis with the NGX? That could account for the discrepancy you are saying. That's one side of it. The other side, of course, is the cost, the running cost of the ETF, the ETFs themselves. All right. So if the cost of management is high, then you could see these differences. But I mean, I would like to take a second look at what you have said myself, and then maybe give some feedback later. Because honestly, I've not observed it.
Yeah, Tunde. Okay, I'm not sure if Today, your internet, you've got to, I don't know if you're moving around or if you are, but your internet is a bit glitchy today. All right. Is he, Tunde, Mr. Tunde, are you there?
Hello, can you hear us?
I can hear you, yeah. I'm just not hearing Tunde. Can you hear Tunde?
At all. I think he has gone up.
I think
you answered the question honestly about ETF. I understand what the big judge was saying about the fact about, and you're right, the composition of the ETF, it weighs differently. I don't think it's a premium or discount issue. The major issue we have with ETFs is that a lot of people don't trade it. And one of the reasons why I don't really tell beginners about ETFs, particularly in Nigerian stock market, is that it has liquidity problems. You fall into liquidity trap. So, for example, if you're an heavy investor, that's someone that trades between 5 to 15 million naira, and you want to try ETFs, you might really hate yourself. So, because the trading volume in a week is
very, very low. It's very, very
exactly.
low. Yeah.
Exactly.
You are better off buying like a normal mutual fund, like the ones Nigerians know, the IBTC mutual fund. All those ones seem to be better, more volume than the Nigerian, than the ETF. Like those mutual. Let me just see if I have. That's what I see myself. That if you buy the ETF, they seem to be better, but you get stuck into this liquidity thing. There's no liquidity then. It's supposed to be a better. I think Tunde is back. I'm not sure if you can hear
I think that's very, very true, because I had a first-hand experience with the Meristem Growth ETF. There was this time that the Meristem Growth ETF had a very good uptrend, up to 10x. And this was 2024, just last year. And I was able to take some profit off during the uptrend, but when the trend ended and the stock started moving sideways, I was thinking, okay, let me just take my capital out And since then, I've placed the trade, and there's literally no liquidity to match my trade to take the capital out. So the liquidity issue is actually, it's a very, very big problem.
And Olumide, Tunde, I'm not sure if you also, I did look at the composition of this, the ETFs and the mutual funds. You find a company saying they are a dividend-paying ETF. And you look at the composition, it's different from the same company that is also offering the same dividend ETF. Or because if you pull up VOO in, say, Vanguard and the same ETF in, say, Fidelity or Schwab, it's the same composition. But in Nigeria, you tend to see a company who say we're a value ETF, and what it has in the composition is very, very different from other value in ETF in a different firm. So again, like that's why I shared what Stock Bubble shared. If you go to the TL, I shared out the Nigerian ETFs, what they are tracking. It's always good that you read the prospectus. Look at the underlying shares. You are buying the underlying shares, just a proportion of it. So if you look at the underlying shares, you can have a feel. If you see more of banks in there, that tells you what the ETF would perform. You see more of energy and Dangote, that also gives you an idea. So try to also do your own basic research, pull up those things, take a look at it. It will also help you just to be abreast. Tunde is just hopping off and on. I've added him back on now. Mr. T, Mr. Tunde, are you back now? Oh, he's I think his internet is very bad. Okay. Is it Mr. Tunde, are you back on, sir?
Yes, can you hear me now?
I can hear you. I see when you go back and forth. It's just your internet. We get it.
It's
Yeah.
They say going off and on.
Yeah, but I think we answered still big. If you want to answer, you can go ahead. But go ahead, sir.
No. I mean, I was able to listen to the conversation, and I think that the illiquidity that you alluded to is a factor. I also feel that even the management cost could also be a factor. So I mean, the ETF market is not it's not what you refer to as a mature market in Nigeria by any stretch of the imagination. So, comparing it to that of the US might be confusing a little bit.
True. I get you. Let me get Abdul Rauf. I don't have a picture. I normally don't like to add folks to add a picture, but Abdul Rauf Muniru. Thanks for hanging in there. I don't know if you can speak. Abdul Rauf, you've got the floor to speak. Today, before he hops, and let me correct. Somebody asked about tantalizers. I remember when tantalizers used to be a quote unquote, was the stock of the time. High, price was just going up. At the point, the price was higher than the meat pie they were selling. And the company just sells meat pie. So what's your take now on tantalizers and that sector?
They had, of course, during the financial crisis, they had problems and they packed up and, closed a lot of their stores and they were inactive. But what I'm hearing now is that a private equity firm is taking up the equities and is trying to recapitalize the firm and possibly diversify the business into other businesses aside from leisure and hospitality that they were doing. There was a news release, I think last week or 2 weeks ago, saying that they are going into fish trawling. I.e., they want to be, doing fishery and be selling fish. So hello.
Yeah, you're audible. Go ahead. Tunde, I could hear you. Go ahead. Don't tell me he's dropped again. Olumide, can you hear him? I think he dropped off again.
We can, Carlo. I think the space is also kind of body from my side too. I don't understand, but we can hear you loud and clear. But it's Twitter. Twitter seems to have fixed all that. So let's see if we can.
Okay, let me add. I know he was saying Tantalizers wants to go into fisheries. They have a private equity firm trying to go in and recapitalize them. So this is to gentleman asking about Tantalizers. I also have a question on Guinness. Someone is asking, what's the fate of Guinness? Is Guinness dying? Someone is asking, what's Guinness? Guinness, the Diageo, is that how it's pronounced? Diageo. The Irish firm or the foreign firm has sort of divested from Guinness, right? So Guinness has been sold to a firm in Nigeria. I think they've been sold to the Singapore firms. So, Olim, is that correct? The guys that own Indomie now own the Guinness, right? They own the rights.
Yeah, it's been divested, and we're expecting a delisting very soon. But I think people forget that there's a cap on Guinness price. I can't remember when I did that per share. The price pegged for to buy the venue stake. So investors are really rotating around that. But the reality is that the stock did erase most of his losses last year. But we're not seeing that run, particularly in the consumer goods sector. The sector that has suffered most has been that sector, partly because of weak disposable income, high food inflation, and FX losses. You could see Nestle still floating close to 52-week low. You look at Cadbury looked like a stock that was close to double price. I remember it was at 16 low in 2024. Just making a joke out of it, the cost of the presidential fleet for maintenance is much bigger than Cadbury. That does tell you how weak our consumer food sector is.
I saw that Tunde. I saw that Olumide, that the market cap of Cadbury is the same as what the president's going to spend just to maintain his fleet. That's crazy. That is absolutely crazy.
I know the question. I was trolled for it because a lot of people said that why would I compare valuation? And you see, what I've understood about Nigerian understanding finances is that we don't get the context of how suppressed, depressed, impoverished our capital market is in terms of systemic. Cadbury is among the NGX 30. Cadbury used to be a very huge company, and if you understand what Cadbury produces, now looking at it, that you're maintaining a presidential fleet with 55 billion naira when the market cap of Cadbury is 52.5 billion. It tells you a lot that we're in serious trouble, and it's like in different sectors. It's getting worse because if you look at this year alone, I spoke with a lot of investment bankers, and the truth of the matter is that what they just say is that yes, we're going to see FX stability, but the reality is that we are not seeing the growth in people's earnings. Where are the jobs, Kalu? Where are the jobs? We are going to see a likely black swan in 2025.
Wow.
We're already seeing what is happening in California. We're seeing the dollar at 2-year high. We're seeing the market at its peak market cycle, 6.5 trillion on the table by investment managers from Goldman Sachs, Morgan Stanley, telling you that if Nigeria gets that bust, we're in serious problem. So how do you say that you are making an excuse for a country that can't really run a blue chip firm to a point where we're getting the quality in terms of returns? Because Cadbury, whether you like it or not, has a systemic role in the Nigerian economy. So the followers that say that we are comparing government expenses with, I think they need to really go back to school to understand the meaning of context, because the truth of the matter is that we are really spending beyond our capacity, and that's just the truth is.
And that's the context you're trying to bring out, that we're overspending. The government is spending an amount that is to a market cap company like Cadbury. That's the point you're trying to make. I got you. So hold up, let me mute Fola. And then Tunde is not here, so Olumide, it looks like we're going to have to carry if Tunde comes back in, of course we'll add him back on. Again, guys, we're speaking with Mr. Tunde Amolegbe. He's the CEO of Arthur Stevens Stockbrokers, He was the past chairman of the Nigerian Institute of Stockbrokers. Very, very knowledgeable. He has been taking all our questions. Folks have asked him everything from what to buy, how to buy ETFs and all that, and has given very, very, very great responses. I've shared his website on the TL. Like I said, he's one of the folks that I use. I also use about 4 other stockbrokers and other apps that you can use. The point is be invested, right? Like I said, any SEC registered stockbroker, be invested with them. You're looking for customer service, and like Tony has said, it's possible to simply open an account with them and trade on your own. That's what you want to do. You want to be invested. Don't have those excuses that I can't get in or it's complicated. Learn about it, then come back and invest small. Invest in the market before you go into individual stock, because you don't know how to do your own research, right? Very perfect. I want to just get a technical guy here. Financial engineering. Want to talk about the technical side of analysis. It says most of the comment speakers are talking about the fundamentals. We're looking at the assets, the liabilities. He seems to be more of a technical guy. Financial engineer. Hop in right here. Give me your take. Financial engineer, are you there? All right, he's not there. Let's get Ikechukwu. Ikechukwu, what's on your mind? Sorry, we've lost our main speaker, but we can take you. Ikechukwu, what's up?
Okay, good evening, sir. Can you hear me, sir?
I can hear you. Please go ahead.
Okay, good evening, everybody. I just have a few questions.
Yeah.
You talked about SEC-registered investment platforms and their apps. I don't know if you've heard about Chapel Hill Delham. That's the owners of Invest Niger app.
Have I heard about them?
Yes, I don't. Sorry, if you know them, rather.
They are massive. Yes, we all know them. Yes. You don't know your minister. Okay, let me not go there. Go ahead. What's the question?
No. So the question is, they've been. It's part of some of the investment. I just really want it because I've been looking at how to see a part, the place in SEC where you can actually search for these companies.
Oh, I see. I see.
Yes.
Yeah, great question.
How they do.
So it's a great question. Great question. So remember,
sorry, sir. That's one of it. Can I finish, sir?
Yeah.
Okay, sir. And then. I actually wanted to ask the guest, what's his outlook on, because looking at these shares, I just saw that the value of MTN shares, while they are talking about this increase in tariff, it rose from 200 to about 242. So I was trying to say now, to ask what he thinks about the Fidelity Bank shares and that of UBA, if these are something, because I just newly acquired that of Zenith, just looking at the individual shares of these banks, what he thinks about that of Fidelity, because I know they sold at I guess it's but now they are at 17 naira per share. But I think when they did their public offer was about 10 or thereabouts. And even FCMB. So what he thinks about the FCMB, Fidelity Bank shares and that of UBA. So that would be the question, sir. Thank you.
Okay, well, Olumide is here. Olumide can take that from you. But let me just make this point, right? When we say SEC registered, the stockbrokers have their own websites where you can go and buy and sell. The apps are just not like physical stockbrokers. Like Otto Stevens has the website where you can go, open an account, do your KYC, submit your documentation, and you can buy and sell shares. But the 3 apps, I think it's Chaka. I shared it. Chaka, Bamboo, and what's the last one? Chaka, Bamboo, and Cowrie Wise. Those are just apps, right? They don't have a stockbroking presence per se, but they're just apps on your phone. So any SEC-registered stockbroker, any SEC-registered app, you can buy and sell shares with them. There are many that are not SEC-registered, but I just want you to do SEC, so at least you have that. You are dealing with someone that's licensed with Nigerian Securities and Exchange Commission. But let me.
Sorry, sir. This Invest Niger is actually linked to this Chapel Hill.
What I'm just saying is this, right? If you want to buy shares, right, go to the SEC registered stockbroker or the SEC registered app. So if the app is not SEC registered, I will not recommend it. If the company is not SEC registered, I will not recommend it. So I think you get the point I'm making. If it's a company, no, there's no. Is it clear?
It's actually SEC registered. I don't understand.
So if it's SEC registered, use them. Send me the link here.
What the problem is? What problem is he having?
I don't know.
It's a solid investment bank.
That's what I'm telling him. Chapel Hill is a 1,000 pound gorilla in the market. Yeah. So don't worry about that firm. If it's like I said, if it's SEC registered, fine. If it's a SEC registered app, fine. I think you got answers on that part. I wanted Olumide to take your other questions as regarding Fidelity and UBA. What his take? That was what you said, right? Fidelity and UBA.
I want to give. So I want to give futuristic because I have exposure in these assets. I've been doing it for so long, and for those, if you've been investing long enough, you should have asked this question. If you have been following financial space, because Nneka has been someone that when she got into Fidelity, I can't remember the price of the stock, but she has done more than 1,000%. That's even excluding dividend. That's how hot Nneka has been. And she did something a few months ago. She spent, I can't remember the amount, she spent hundreds of millions on Fidelity share at an average price of 15 naira. The problem is that a lot of people want to be spoon-fed about investing. You can't put people in trouble because this is a regulated space. You can't say, buy this stock. You are liable because you are not authorized. It's only investment banks that can, and even investment banks, so those them coming outside to say buy. So the understanding is that when you see an insider, when you see a top manager like Nneka, the MD of Fidelity buying a stock, what is she telling you? She's telling you that she sees growth because she definitely has information many of us don't have. And for us to understand how finance works, it means that there are more upsides going with the whales, because really what moves the market is demand and supply. When you see big players buying in stock, it probably means that there's something really going to happen. So you don't really need to do further maths or integration or do this. And that's why when people talk technical, they do all the EPS, they do all this. The truth of the matter is that if you look at the composition of the Nigerian stock market, if you can follow sound historical data, stay focused on your system, read basic news, and understand the assets, you would make serious money. UBA is another exceptional stock. You see, Carlo, I've been investing in these stocks since after school. So I think to understand the fact that a lot of people will tell you that, 2008 excuse, my grandmother lost money. Nobody here is richer than Tony Elumelu. Tony Elumelu is heavily exposed in the stock market. So how do you make money from exposure to Tony Elumelu? Simply knowing when these guys come in, simply knowing when the stock dips, simply knowing when there are some announcements, like for example, if you look at African Potential, the registry firm, it went all-time high last year. That was really massive. I look at UBA, despite the fact it gave dividend, it was one of the best performing tier 1 bank. Fidelity was the best performing banking stock in 2024. So I think in 2025, what you should be looking is how to position yourself. Waiting for the dip, waiting for the news, looking for any results, likely cases, position yourself. A lot of people missed MTN because, like Carlos Space, we spoke about MTN. A lot of people that tapped into MTN, not because we recommended, we just give analysis, and they are already up by 30%. You can't be expecting people to be telling you buy, sell. You're just going to put people in trouble, and that is not how to really get engaging. So that's my own perspective, Carlos.
Okay, I think he's got it. But let me give you the numbers just for the folks that are listening. Let me give you the numbers, right? So let's pick Fidelity. So let's do 1 year return for Fidelity, 45%. 5-year return for Fidelity, 760%. So remember, past performance is not a guarantee of future performance, but that's the numbers as we have it right now. Fidelity's market price is 17 naira. What's its dividend yield? So dividend yield means we'll take the dividends, then we convert it to a yield, which allows us to compare with other other asset classes and even other stocks. So this is not the dividend, but the yield, what you are going to get if you invested in Fidelity and you got a dividend. That's about 8.29%, which is about the same you'd get with those Zenith and the UBA. So if you bought this stock at 17 Naira, what you're going to get back is about 8.9%. Earnings per share, about 8 Naira, right? Beta 26. So PE ratios, I like that. It's the price to earnings ratio is 2.10. That tells me when I buy this stock at 17, I am paying 2 times its earnings. At the current earnings, I'm paying 2 times its earnings. Or put another way, it will take me 2 years to get my principal back if earnings stay the same. So your question is going to be, do you think, like Olumide has said, do you think this company or this sector is positioned for growth? With banks, the biggest tell for earnings growth, for stock market performance is earnings growth. If the bank makes more earnings, the bank stocks go up. So the question is, what to make a bank's earnings go up? Is it by branches? Or is it by deals? Or is it by exposure to the forex market? You've got to understand how banks make money, and then go back to Fidelity and say, is Fidelity doing what those banks are doing? Right now in Nigeria, it's going to be a game of scale. The biggest bank is going to win, not the bank with the best product or the bank's customer service. The bank with the biggest scale, branches, assets, it would win just by suffocating the others. So that's how far I can go on this. But the numbers, looking at the past returns, look good. And like Olumide has said, Olumide, go ahead.
Just add a little thing before I go about banks. Nigerians need to understand that Nigerian banks are unique and different fundamentals for different banks. If you look at, for example, banks that have the highest number of branches are not the most valuable bank. The most valuable bank in Nigeria is GT. Why is GT very valuable? Because of efficiency, high earning per share. You look at return on equity, massive. They have a strong technical. Then you also need to understand why GT is more stable. There are a lot of FPI's exposures, foreign portfolios, that stock. GT is also listed in the London Stock Exchange via GTR, Global Depository. So you need to understand that, okay, it has foreign exposure. You look at an Access Bank, for example. Access Bank is solid, Access Bank raised money was more successful than almost all the tier 1 banks in terms of raising capital. You look at it, they announced oversubscription, which was not surprising. You can't AIG and the late Abbott, they built a strong marketing. So you need to understand the fundamentals of each bank. That's another thing. And you get to know these things by understanding the management team. So when people look at them, just to make Nigeria, you miss it out. UBA is another stock. You cannot bet against Tony Melu. He's exposed in almost all sectors of the Nigerian economy. And under this administration, he has been like I don't want to call him the individual guy because he's more of the old school guy, but he has returned massive returns for investors. So it's somebody that you don't want to push aside. Then Motodola went from Yoda came to First Bank. You could see the growth. The bank at one point got to 1.5 before moderating to 1.3, 1.4 market size. So Motodola has really positioned the bank, despite the fact that there were some court cases, there was major losses in terms of loans, we see kickbacks and minority kicking. But that exposure and they sold their investment bank, that has really rewarded shareholders. So people need to really look at these things on a case to case. So while fundamental technical analysis is good, the truth of the matter is that just sticking with the fundamentals around those core areas will really make you a lot of money.
Great question. And then just also to end with UBA, just for the numbers, for those listening. So let's look at UBA. Why I like UBA is the price to earnings ratio. It's 1.8. So which means the price is about 34. Remember, guys, this is all historical data, and past performance is not a guarantee of future returns. I'm not giving you an offer to buy or sell. This is not a recommendation. So UBA's PE ratio, the price to earnings ratio is about 1.8, which means if I buy the stock at 34, I'm paying 1.8 premium to get that stock, or I'm going to get my money back in about 1.8 years. What's the dividend yield? This is a good part. 12.57. So remember the other one, 12.57 is my yield. That's what I'm going to compare with other asset classes like a bond or even real estate. So if I build a house I use $1 billion to build a house, what's my rental yield? That's what I want to compare with this dividend yield. I don't compare the appreciation in UBA stock to the appreciation in the property. No, I want to compare what I'm getting back, which is my yield. So this is 12.57 UBA yield. In terms of returns on the stock, if you look at 1 year, 16%, 5 years, 309%. So that's just numbers for you. You've got to look at the numbers as to give you a base to then say, okay, should I go into the stock? Should I do long term? When we asked Tunde about Dangote Sugar, Tunde said, listen, this stock is something that if you are doing is patient capital because they are reorganizing, backward integration. So just keep that in mind. And again, last point, Olumide made a point. The Nigerian bank sector is a very, very interesting market. It's only in Nigeria I have seen a bank that was formed maybe 100 years ago being overtaken by a brand new bank. You cannot find it anywhere on earth. You might find the older banks fail, but you're never going to find a new bank rise and overtake an existing bank. Not just an existing bank, a bank that has been existing for more than 100 years. It's impossible because the way banks work is that capital is compounded, that even if you make profit, you really can't get at them because that capital has been built in. I mean, look at, I don't know if I can use examples. When you take a bank like First Bank, First Bank was in Nigeria before there was a country called Nigeria. So they've gotten, this is capitalized earnings over years. You can't wake up and just come and say because you have good customer service, you beat them. But it happened in Nigeria. You have banks with one branch in Nigeria making more money than banks with millions of branches. What was IBTC? Look, I remember IBTC. So you can't look, I get Nigeria is a very unique market. But in the end, when you look at the balance sheet of any company, it comes down to earnings. If you can, from one branch, make money, perfect. Before UBA, I don't know if you might be young, right? Before UBA, it was UBA that started to open branches in Taraba, Ebonyi. When I mean off states. Before then, bankers didn't really go to a quote unquote, I'm not trying to be, they didn't go to those off states. UBA established branches in all the states because it went after those state accounts, those FAC accounts, and it became a line for them. Every bank you see that made it in those days had a strategy that allowed them to accumulate deposits and to rise. It was Oceanic Bank that started going to companies to pick up their cash. So Intercontinental Bank had what they did. All these small banks that came up after the big four of First Bank, Union Bank, AfriBank, and Savannah. Those were the banks before. First, Union, Afri, Savannah. Those were the banks. UBA that you see today is Standard Bank, Standard Trust Bank, that then went and bought UBA. That's what you see today. So it's very, very rare to find a small bank beating a big bank, and it's really down to earnings. Your best predictor of a stock price of a bank or any company is future earnings. So you want to ask yourself, how is the bank positioned for future earnings? If they are in certain growth sectors, then they are good. If they are doing, what are the growth sectors in Nigeria today? Ask yourself, who are their bankers? When you pull up a annual report for a company, look at who their bankers are. There are a few banks you never see as bankers to a major company. Pull up Dangote's annual account, look at the bankers there and take note. Pull up BUA, look at the bankers there and take note. If you're not doing banking with Dangote, with BUA, with NNPC, then why are you doing your banking? Where's the company making that volume from? So there are ways you can do your research. You don't have to know PE or not PE. But if the bank is big and it's growing, look at Access. Access Bank was it not Key Bank? It was Key Bank. Access was Key Bank. A few young guys bought it, have grown it. Now they are in Lebanon, they are in Asia, they are in London, and they are growing. The largest bank by asset size. So Nigeria is really interesting. You can start a bank today in Nigeria. And last point before I hand over, the whole banking thing we see is going to change pretty soon with AI. With AI, the cost of doing banking is going to radically change. You don't need a lot of risk managers, analysts, anything that involves rote, that you go through, use a guideline and you give an answer. Those jobs are going to die. If you have to read a guideline and give an answer, those jobs are in big trouble, not just in Nigeria, across the world. So if you have to say, if customer does A, I do B, if that's your job, it's in big trouble. The jobs that are going to survive are going to be the ones that need some thinking. To say, okay, what should I do if customer says A? Because the AI can think. The AI can perform a task faster, but it doesn't have original thought. So if you get what the point I'm making. So if you're a loan officer and your job is, does he have collateral? Yes. Or yeah, give him a loan. Your job is in trouble. But if you're a loan officer that says, does he have collateral? What is collateral? Let's define collateral. Is collateral intellectual property? Things like that. AI doesn't think. So it just does your job faster, better, with no errors. So just keep that in mind, guys. Let me add Tunde real back, and then let's get Dave. Tunde, if you're listening to that, I'm trying to add you, but I think it's your internet. Oh, let me do this. Let me take Dave. Please go ahead.
Thank you so much. I'm just learning a lot. I just have a quick question. Thank you, Carlo and
Perfect.
Let's say, can you hear me? Yeah,
I can hear you. Yes, go ahead.
Okay, cheers. So I'm just trying to understand. Let's say do you have to have the Naira account? Let's say you're outside of the country, wherever in the world. Do you have to have the Naira account?
Hello.
Yes.
Yeah, Tunde, you're back. And I think it's a good question for you. Dave is asking that. Dave, I think you're not a Nigerian. You're not a Nigerian, Dave?
No, I'm not.
Okay, so if you had to invest as a foreigner, this is just my own, and Tunde can explain better as you. I don't know how much you want to invest, but you might want to consider just going through the prop capital importation certificate is very, very important for you. So if you have if you deal with, say, Tunde now, right, he will be able to give you the documentation, the KYC documentation, to show that you are a foreigner, you are bringing your money in, because you want to take the money out, as an investor. I don't know if you are institutional or if you are retail. But
just individual, but trying to understand how this taxation, what is the requirement for anyone to, even if you're not Nigerian, to involve in the stock exchange in Nigeria, if you're interested. Are there any facilitators like depository receipt facilitators, or how does it work? Just trying to understand. If any of you guys outside of the country and still invest in that company, any company you want to invest in Nigeria stock exchange, how do you do that? I know for the institutional guys, but today maybe can answer for Tunde. What's your take?
For the individuals, it might be a little bit challenging going through the trouble of going to go and get a certificate of capital importation and all of that, because I do not know the quantum of money you are looking to invest, and also the nature of instrument you are looking to invest in. Most investment in Nigeria is primarily done in Naira, meaning that dividends are also paid in Naira. All right. It will mean that you are going to have to generate a local account. Generating a local account is not difficult. That can be done online, but it will require you to have what we call a BVN, bank verification number. It will mean that you have to open a Naira account. So in order to get a BVN, and if you get a BVN, we can open the account for you, and then you can start trading. Nigeria really does not have restrictions regarding foreign ownership of shares, of local shares. Those restrictions are in there, but I mean you are going to have to just find a formal way to convert your foreign currency to Naira, and then you not trade in Naira. I hope that's clear enough.
Right, thank you. Now, for example, if you're in a Fidelity and you want to invest some company in China or Canada, that will do the facilitation, and you don't have to deal with all those, whatever in the world you are. I was trying to see what's the procedure for you for the Nigerian stock exchange.
Yeah, Dave, I think it's
Good.
if you are institutional, there's actually a process for that. Like all these questions you're asking, it's easier if you are institutional. But if you are retail, in the past we used to have ETFs that were listed in the New York Stock Exchange that you could buy that ETF and it gave you exposure to Nigeria. But now that ETF is no longer available. So it's a bit difficult now as an individual because, like Tunde has said, you have to have the bank account. You have to have all those KYC documentation before you can trade. It's not because you're a foreigner, but it's because you have to have them. So you might have to now come to you might open a custodial account and get a lawyer to do most of this stuff for you. But then is it worth your while? That's why I asked you how much are you investing? Because if it makes sense for you, then Tunde can do all that for you. But it has to make sense for you, if you know what I mean.
Yeah, absolutely.
Dave, are we good?
Yeah, fair and square. Just trying to understand how this thing works anyway.
Yeah.
Thank you. Maybe if I have another question, I'll just
where are you calling from?
I'm down in the States.
United States, gotcha. Perfect. I mean, it's a big market. I would advise it's a good market to put funds in. Yeah. So like I said, look for the only other way you can get exposure. There are some ETFs that do Africa. I looked, to be honest with you, I didn't see Nigeria there, but that's the nearest you can do without coming to Nigeria to buy. But if you're interested, look at Tunde's send him a DM. At least get what you need. Then see if you can do it. Just send him a DM and say, can you just give me, I'm a non-resident investor. Let him give you what you need, and then let's take it from there. Yeah? All right, Dave.
Cheers,
appreciate it. All right, Stephen. Tunde, thank you for coming back. Stephen is here. Stephen, we called you. You weren't here. Stephen, go ahead. Stephen, you've got the floor.
Okay. Good evening. Apologies. I never knew you called me earlier. I just wanted to ask Mr. Tunde a few things. Earlier, I heard him speak about the fact that many Nigerians are exposed to the stock market through their pension accounts. So that's true for the fund types that are allowed to buy equities. But I wanted to ask him, specifically, if there are collaborations among, capital market associations to really improve participation in the market. I know there is an association of stockbroking houses in Nigeria. I know there are fund managers, FMAN, Fund Managers Association of Nigeria. I don't know if there are any sort of collaboration between these parties to really improve participation, because if we check, mutual funds in Nigeria, there are about less than 1 million Nigerians invested in mutual funds. In fact, that number is closer to 800,000 than 1 million. If you look at the stock market in its entirety, only about 100,000 active brokerage accounts exist, even though the total number of unique brokerage accounts is around 5 million. Only about 100,000 of them are active. If you look at pension funds, only about 10 million Nigerians have, pension fund accounts. If you put all of that together, all of those numbers in aggregate terms are still very low compared to a population of 200 million. So I want to ask him if there are any sort of collaborations, between capital market operators and their regulators to improve participation of Nigeria in the markets. That's one. The second question I'd like to ask him, if he has got time to address them, is what he thinks about Nigerian listed companies that have FX exposures. Some of these companies, i.e., say manufacturing, some of the big ones amongst them are even struggling. Some of them have negative equity. We mentioned stocks like Nestle. They've been struggling given the challenging FX regime that they've had to face. Talk less of the smaller ones, So I wanted to ask him what his outlook for those kind of companies looks like for 2025, and specifically how it does appear that they work more for their foreign vendors, like for shareholders who actually invested in them. Local shareholders who actually invested in them. So what does he think the outlook for such companies, especially manufacturing, Nigerian breweries, Nestle, and all of that companies in those categories. What he thinks, or what his outlook for them in 2025 looks like. Thank you.
If you can hear me, I hope you can hear me.
I can.
All right, now just in short, because my network isn't very, very stable at all. It's been going off and on. Those companies with foreign shareholders tend to also have significant foreign content in their products. Given the volatility of the FX market, they have a significant decision to make, and the decision centers around: do they want to continue to do business as usual, i.e., continuing to rely on significant foreign content, or finding a way of doing backward integration so that they can increase the local content of their products? All right. So that is the decision some of them will have to make. You will see that some of them have already made the decision to walk away. All right, because they found that the FX situation does not make very good business sense to them anymore. Because the truth of the matter is that even if they make the money, they will still need to convert it to dollars. And converting it to dollars probably does not make business sense for them again. That's why you see the likes of Lafarge and Co. deciding to, Guinness and Co. deciding to walk away. But the ones that decide to stay, all right, we'll need to take a long-term view and gradually find a way of increasing the local content of their products, and also have to consider the possibility of investing even their dividends locally, as different from insisting on taking their dividends, their dividends abroad. So for me, as an investor, I will look closely at what their board and their management, the kind of decisions their board and management will be taking in the next few years, as to what they want to do regarding reducing the foreign components of their products, and regarding repatriation of dividends. Those are the factors that will determine the performance of the companies on the stock market ultimately, in my own view.
Yeah, then he had a second question about the linkages within the PFAs and any linkages and all that.
What does the linkage mean?
Yeah. So I asked if there's any sort of collaboration, maybe between ASHON, that's Association of Stockbrokers Houses of Nigeria, and then FMAN, the Finance Fund Manager Association of Nigeria, to really improve participation of Nigerians in the market, because participation is actually low if we put all of the numbers together.
I'm not sure. Tina, are you still there? Tunde, still there? It might be the patchy internet against Stevens. So, Stephen, I think I got your question. I think we have addressed that low. I think today had been addressed that low participation. Also, to look in the low participation in Nigerian stock market by Nigerians and all that. So, it's something that we have to. He did address it. In the US, it's a larger participation in your 401ks and also in individual accounts. Lots of Nigerians are only exposed to the stock market through their PFAs, right? Very, very little CSCS account and very, very little active CSCS account. That's one thing we want to change here. We want to make it very, very easy for Nigerians to understand that investing is basically the pathway to beating inflation. If there's no inflation, guys, you're okay. But because of inflation, 1 naira has lost 30% already. So you've got to try to get that 30% back, or at least reduce the gap on that loss by investing. That's the whole idea. So I want to get Ben. I see your hand up. I want to get other folks to speak. But Ben, go ahead. Go ahead, Ben.
Yeah, just a quick question.
on a potential IPOs on these things in 2025. I don't know if you guys have spoken about.
Your audio is very low. The audio is very low. I'm not sure. I had potential. I'm not sure I had the other one. I'm so sorry. What did you say?
Can you hear me clearly now?
Yes.
Okay, so I was talking about potential listings or IPOs in 2025.
Oh, I see.
And I don't know if you guys have spoken about it, but the Dangote refinery is potentially going to list in 2025. I don't know how potent that news is, but I've heard some sources speak about that. Well, and the other thing I wanted to say was what you just spoke about, increasing the basically making Nigerians more involved in investments, equity, in security investments, making Nigerians more involved, especially in the equity markets. Because you find out that a lot of Nigerians actually invest a lot of money in things like Forex, and which is very, very risky, retail Forex trading, and all these Ponzi schemes, I don't know if somebody has data, but if you go and find out, they did a section on Arise News where they spoke about this. Nigerians spend a lot of investments, a lot of their savings investing in Ponzi schemes and Forex. And, crypto too is somewhere around there. So I think that it's very crucial for us to, especially we that are pro-equity markets, to find a way to, refocus these investors to come to a less risky equity market compared to Forex or something like a Ponzi scheme that is just, very, very negative. Like it's basically fraud. So that was what I wanted to say on that. And then the first point was the potential listing of Dangote refinery in 2025, and also other potential listings that we can look at.
I think Dangote is the main one. Olumide has spoken about it extensively. Tunde, do you have a take on Dangote refinery listing and what's going to happen if that comes in?
I think Dangote will come, whether it's this year or next year, but it will ultimately come. But for me, one of the things we've been advocating all these years is that for the market to become more liquid, for the market to have more listed companies so that we can increase participation, government policy needs to change. And part of the things we have been pushing is that, look, all these companies that government have stakes in them, all these companies that they are privatizing, whenever they are privatizing them or they are commercializing them, there should always be a clause that says, look, you, Mr. A, we are handing over government company to you. But we expect you that in 5 years, you must come and list. It must be in part of the purchase and sales agreement. All right? In all transactions that have been done. Look at it. We will have gotten more companies listed, assuming the government, when they were privatizing the discos, has insisted that, look, within 5 years or 10 years, you must come and list. All right? Now they have done this transaction with Dangote too. I don't think there's any clause that says Dangote must come and list. But I think that maybe his need for liquidity will ultimately push him to come and list. All right? But you will see that the periods by which the stock exchange have grown the more in the country has always been period where we have had active government push to have companies getting listed. For instance, 1977, Obasanjo decided that he's going to do indigenization. All right, and the indigenization, he forced companies that they must sell to locals and they must list on the exchange. And we got an exponential number of companies coming to list at the stock exchange. 1980, I think 85, I can't remember exactly. TCPC, privatization and commercialization. All right, a lot of government companies were privatized, and a lot of them were forced to be listed. So, if we really want our stock market to be big and actually be representative of the economy of the country, then government will need to take some decisions. as to, trying to come into list. I don't know whether you are still hearing me.
Yes, of course.
Yes,
so,
yes, I can.
Do you think, in terms of the impact, do you think it's going to bring in new money, or just going to be recycled one that's already in the market? What do you think will be that impact?
The impact of liquidity, the impact of more companies listed, increased choices for investor. All right, increased choices, increased returns for investors. We see a lot of foreign investors coming into the country, and when they look at the stock exchange and they see 150 companies or 200 companies listed, and when they do the analysis, maybe only about 50 or 60 of those companies are actual investment grade. Meanwhile, the fact of the matter is that there are lots of private companies that are doing very, very well in very, very solid sectors of the economy, but they are not even considering listing. They are not even thinking about listing, and it shouldn't be. Stock market, we say, is supposed to be the barometer of the economy. So if the stock market moves either up and down, it indicates the direction of the economy. But that is not the case in Nigeria. In America, yes, when the stock market moves, and that is why Donald Trump will come.
I'm losing Tunde again. I'm losing Tunde.
All right, they're actually listed as different from. Hello.
Yeah, Tunde, I lost you a bit, right? When you were talking about it, I did lose you. Now you're back on. Let me ask this question, fine, for you on Dangote. Looking at Dangote's fundamentals, they are none yet because it's just less than a year he started. Is this going to be I buy, is going to go up in price, or I'm buying for the long term? What's your sense? Is it going to be like a boring utility, same dividend stock, or is it going to just come up here and the stock price is just going to balloon because of the inelasticity of what it's selling? What's your take on Dangote Refinery as a quoted company stock? Tunde, did you hear me? Okay, I think I'm not sure he could hear me. Yeah, we having serious internet problems. Let me try to run down the room. Then maybe we'll sort of like let me take Adebayo Ayiti. How are you doing, sir? Adebayo, can you hear me? Hope you can hear me.
Hi, Kalu. I can hear you. Good evening.
Perfect. Yeah.
Yeah, thanks. You are doing a very good job here. I've been joining this space for about 4 weeks now.
Oh, nice.
See what you're doing to raise the bar of awareness and financial literacy out there is fantastic, and I must commend you. Thank you so much.
Welcome, sir.
I do have 2 questions. Number 1 is around ETFs in NGX. I have a little bit, as a retail investor, I have a little bit of exposure in NGX, and I use the Bamboo app. So when I searched my app for the ETFs, it's not there. So I wanted to ask, how can I get to buy the ETFs on NGX? If I'm not using Bamboo, what else can I use to buy? The other question I would like to ask is for Mr. Tunde. I hope you can hear me. I was going through his Arthur Stevens' website when he started speaking. I wanted to open an account with them. Apparently, I'm a non-Nigerian resident, but I do invest through my Bamboo app. So I was just trying to open an account, and I see the issues I normally have to encounter with every brokerage or even bank out there. They ask for public utility receipts, and they tend to limit it to either your NEPA bill or your water bill or what have you. And some of us don't live here. We don't have NEPA bill, or we don't have a recent NEPA bill or water bill. I wanted to ask him, does his company accept a national ID card, for instance, with an NIN slip that has my address as a public utility receipt, or it has to be rigid NEPA or water bill. I know this thing is sort of a regulatory requirement, but I think there should be a workaround for those who don't live in Nigeria at the moment.
So that's going to be a local. If you have NIN, that's local, right? So do you have a Nigerian address? Why not just use a Nigerian address since you have NIN?
Yeah. Yes, I do have an NIN slip that has a Nigerian address.
Yes.
I'm asking if you would accept that.
Yeah, they would accept. What they want is know your customers. So they want to ensure that you are human and that they can trace you. So because if you are not if you are fraudulent, you would like to say where you are or not. You want to leave a paper trail. So I would say if you have local document, that's easier for you than doing the foreign one, right? Okay. And again, just his office is send him a DM. Just ask him to send you to a like their accounts rep or someone, and just talk to the accounts rep. Sometimes talking to the MD is just says, "Hey, can I get someone I can speak with?" I will. Let me see. Someone you can speak with, and then just talk to the person. This is what I have, which is better for me. The account rep will tell you this is what you need to bring. Remember, they're not asking you for auto-statements. It's by law. It's regulatory by law. Yeah. So they're just telling you what their own folks at top end are telling them as well. So I would just try to speak to your account officer, but I would prefer you do the local one because you have less documentation. NIN, your house address with your name on it, that allows you to open the account. Once you open the account, then you inflow funds. So you send money to that account in Naira. Then you can trade. It's pretty seamless. Once you get the account open, then it's pretty seamless. Yeah.
Grand. Thank you.
Mm-hmm. So as to that ETF in Bamboo, you just have to, I think you have to have the exact ticker name. You have to have the exact ticker name. Because if you just put, it might not pull it up. You have to have the exact name to put in there. And again, remember guys, ETF in Nigeria, for me, because the low volume, just be a bit careful about that. Because the low volume, you might get in but not be able to get out. I would also ask you to look at mutual funds in Nigeria. Mutual funds might be a better option. What I mean better in terms of liquidity. They both do the same thing. The only difference between a mutual fund and an ETF is that the mutual fund, you have to wait till the end of the day to trade, right? But the ETF, you can trade during the day. That's really the main difference, right? So but mutual funds have a bit more liquidity. They've been around for longer. So I think the market understands them. So just be careful. If it's something you want to buy and hold, fantastic. But I would just go with the mutuals in Nigeria. And then if I'm abroad, yes, ETFs, because it has tax advantages. If you buy an ETF in America, there are some tax advantages in how they recognize transfer of shares inside the ETF and all that. But here we don't really have all those tax issues. So just keep it simple. If you want to invest in an index, buy the mutual fund. You can even create your own. You can go to the NGX 30 and look at the constituents of that index. So if you can pick 10 or the 30, buy your own 30. If you send $1 million, tell them to buy you can buy the same thing and recreate your own index, right? So that's what I was. Just be careful with the Nigerian side because of the liquidity on that side. Apart from that, I think it should be fine. Yeah.
I got you. Thank you.
Excellent. Let me get Fola Oluwahimi. Fola, how you doing?
Very well, thanks. Can you hear me?
I can hear you very well. Go ahead, sir.
Yes. Yeah. Thanks, Kalu. Just really appreciate what you're doing for the next generation. I mean, this is just phenomenal.
Thank you, sir.
Thanks to Mr. Adeshina. I follow him on Twitter.
Perfect.
My question is this. I've been investing in the Nigerian Stock Exchange and then the NGX for over 2 decades now. With very patient capital. I have multiple accounts, this, there, that type of thing. So my question is, looking to consolidate, what's the best way, to do that? Trying to consolidate all those accounts. And next, or a follow-up or a related question to that is, I've never really positioned myself for profit taking. In fact, I only started to think about it now, following Mr. Adeshina's some of his Twitter posts. So my question is, how do I best now position myself for profit taking? Some of those, equities have done very well over the years.
Yeah.
And finally, just a random thought: is Flutterwave ever going to come to NGX?
Well,
Thanks for all you do.
We hope so. So your last question is pretty easy. If they come in, it gives us more options. It gives us breadth. It allows the exchange to, to modernize, in terms of the offering. So I hope they do. It will favor them. It will favor the investors. It will favor Nigeria. So no one loses in that aspect. Let's go to your first question on how you can sort of take profit. The first thing you have to do, sir, is to first of all know how much you own in all those stocks, right? So I would say pick up all your stocks and get a local stockbroker. Pick one that you'd want to use. You're going to consolidate all your stocks into one CSCS. So let's say you've used 4 or 5 stockbrokers. You want to pick one that you're going to consolidate everything into. So that CSCS, you want to write to all the companies that you own, you have shares in, and say, hey, I like to collect all my past bonuses and dividend shares. So you give it to your stockbroker. Your stockbroker would go to the individual registrars with that letter, and they will collect really your past stock brokings, any bonus shares you have missed. They will collect everything. You will sign transfer forms and give them. They will transfer everything to your position in that CSCS. So first things first, that you now consolidate everything you have. There are many dividends you might not know you have, many bonus you might not know you have that are out there. So everything now comes to one CSCS statement. When you have that one CSCS statement, I would think you want to try to use an app, right? Why? To calculate your average costing. Let's say, for instance, you bought UBA stock. You use, say, 10 Naira to buy 10 UBA stock. If you've been given a bonus, that bonus has gone back to your UBA holdings. It has reduced your average cost. If you have your dividend shares and you reinvested your dividend shares, it has also reduced your average cost. The point I'm getting to is that if you then actually plot your average cost, your return, because you've invested for almost 10 years, would rise exponentially because your average cost has gone down while those share prices have gone up. So with that sort of analysis, you can say, wow, I've made 2,000% on this stock and I've made minus 20 on this stock. So that sort of gives you an idea, okay, should I cut off the dead leaves and allow this tree to just grow? Should I prune it? Should I plant more of the same trees, or should I have a plantation that has cabbages? Should I do multi? No, you want to first of all see what you have and what the actual return is, which is what that app would give you. You can do it manually, but it takes you a long time. Like a stock like Mint. Mint will do that for you, where just like a stockbroking portfolio where you can plug the stock original price, then plug in the dividend received. Even if you allow the dollar sign to be there, it doesn't matter. But you want to get your average costing. So you then compare your average costing to the market price. That's your real ROI over that time. You're trying to do a time-based return, not a return-based. You're trying to say, I bought UBA 10 years ago, I've plugged in my dividends, I've plugged in my earnings, what's my average cost? I take that average cost, I compare with the market price, I get my real ROI, right? So based on that, you can then take a decision. Okay, what's my strategy here? Am I selling stocks that have gone above 200, or am I selling stocks that have fallen below 200? You have to have your strategy. You just can't sell because you made a profit. You have to write it down so it's a bit disciplined, right? You say, okay, if I've made so amount of profit, I will take profit. I would sell. If I'm making this, I will. Don't have a disciplined approach. Arrange your stocks into, should we say, the clusters. So if you have energy stocks, what percentage are you exposed to the energy market? Are you diversified? How is your portfolio? So you want to do all this before you buy and sell, right? So you consolidate, you get your average costing, you put it into an asset allocation sheet. That gives you a clearer picture before you can then say, I want to buy or sell. Yeah?
Thank you so much. I'm glad I asked the question.
Yeah,
obviously, there's some sense that goes into it. I really appreciate the response. Thanks.
You're welcome, sir. All right, we're just winding down, guys. Let's get EA Amadi. EA Amadi, what's up?
Okay, good evening.
How you doing?
Fine. This is my first time on the
welcome.
Space. Thank you, sir. I'm actually looking to start putting away some little money. I'm still in school. I'm still an undergraduate.
Yeah.
So I'm actually looking to start putting away some little money by the side,
Wow.
like start really saving in that aspect. So I've looked at some crypto. I have some crypto, but I want to look at stocks now. My first question is this: I want to know the US stocks and the Nigerian stocks, which is better and safer. Then number two, for the Nigerian stocks, I'm looking more of like long term, like long end of the year, 2 years, and stuff like that. And I don't want anybody like to hand me just these are stocks to buy, because of I understand the financial practice. Even though what I'm to look out for, the research metrics and stuff like that. I just want to be informed and know those kind of things.
Great question, Amadi. How old are you?
I just turned 20.
Wow. So you've got you've got the secret weapon. You've got the weapon of time, which means you have a lot of compounding periods that you can use. Compounding means if you buy something today, you are going to make more money than I, because you have more compounding periods if you simply buy and hold, and it's a good stock. So the way I would answer your question is this, right? It's great you want to invest, but you're a student, so you don't have a lot of disposable income. You are basically taking your pocket money to put aside and invest. So so be very careful that you don't invest and then tomorrow you sell, because you have to eat, right? So that's one thing, right? So but let's assume you now have money from your uncle that you want to put aside and you can invest. You asked the question, should I invest in the US or in the UK? It's cheaper for you to invest in Nigeria because you are doing Naira. Not because American stocks are better or not better, but you are going Naira to Naira. In US stocks, you have to go Naira to dollar. So you're going to pay a premium to invest in that. Not that you should not. I want you to do that. I want you to pay a premium, but at least start with Naira, right? So we're going to try to buy you a good, give you a good Nigerian exposure and then move from there. So, but which Nigerian stocks should you buy? I don't think you should buy individual stocks because you don't know which one to buy and you can't do your own research and you don't have the money to buy 10. So you are a prime candidate for an equity mutual fund or equity unit trust scheme where you are going to go buy you buy the basket and then you reinvest your dividends and you forget about it for 20 years. That's what you want to try to do today, right? So you want to buy all those, write it down, those equity mutual funds because of your age. I heard you say 2 years. 2 years is short term. 2 years is not long term. If you want to do 2 years, you want to go and do the federal government savings bond. They have a 2-year bond. It's guaranteed issuer, so you would never lose your money. They will pay you from 11% to 13% or more, but it's guaranteed. Because it's guaranteed, the returns are lower. Do you understand? If I guarantee something to you, I'm going to give you lower return. That's how you know if something is fraudulent. If somebody is guaranteeing you something with a higher return, it's usually not correct. So if you're going to do 2 years, that's fixed income. But at your age, usually people at your age should try to do longer term investments in, say, equities and allow the power of compounding to come in. So tomorrow, if you leave your university, you can keep that account going and keep on investing. So when you're like 45, you've had 20 years or 30 years compounding. That's how I'd advise you. I would say start with Naira, start with an equity mutual fund. Only invest money you would not need again. Don't put your money that you're going to need to eat in school or buy textbooks. It's only money you're going to put aside you will never need. So go to meet a stockbroker or get an app. Leave crypto alone. Go get an app or a stockbroker, and then you want to start from there. Yeah.
Okay. I think for the app, because I've heard a lot about Bamboo and Cowrywise. For the equity mutual funds, I don't know much about it. I would like to ask.
Google it. Google. I want you to Google it and learn it. So I want you to Google Nigerian Equity Unit Trust. We call it Unit Trust in Nigeria. Mutual fund is an American term. So Nigeria is Unit Trust. So just Google Nigerian Unit Trust. There will be 2 or 3 that are very, very good. There's one that has been here for a long time, Google it, then buy. It's you are buying the market, you are diversifying, and it's a bit cheaper for you. You understand? So I want you to invest in the learning first before you invest your money. So don't just invest without learning. That's the first thing. So you invest, to go to YouTube, you Google it, you read about it, you understand what you're doing, then you invest, right? Equity unit trust scheme. You put some money in there, you do attempt to reinvest your dividends. You don't have to use an app. If there's a stockbroker near you, you can go there. If they have a high cost of investing, go to the app, right? But you want to reduce your costs or your transaction costs as much as possible. Your objective is more longer term. Don't invest today to say I want to sell tomorrow. Forget about selling, right? That one I say making sure that it's money that you're not going to need. If you're going to need the money, don't invest, right?
Okay.
Perfect. Good job. Yeah.
Sir, is it okay for me to DM you in case of any other question or so?
Yes, you
That'd
can.
be all right.
Yes, you can.
All right.
Only you. Only you. Only you. All right.
All right, sir.
All right. Olamileku Barua. You're going to be our guy to close us out. How you doing, sir? Go ahead.
Good evening, sir.
How you doing? What's up?
Can you hear me, sir?
I can hear you very well. Go for it.
Okay, good. Please, this is my first time joining this also, and I really appreciate the opportunity to be here. My question goes that I'm actually newbie in the stock market also. I just opened the Bamboo app, I think a few days ago, and I make a little deposit there. So my question is that you said something that these apps are different from the brokerage. I think you say about the brokerage or something like that, that the apps are different from it, that these are just apps where you can trade. So I don't understand that, like you said very well. I don't understand this brokerage company that you said. So I want you to enlighten me, to talk more about that. And secondly, how do we just buy the stock and keep it? And maybe wait for annually or quarterly before you can start thinking of taking dividend, or how does it work? That's my second question.
Okay, so your second question tells me you're a brand new beginner, right? So when you buy a stock, it's the same way like your friend comes to you and says, I want to open up a shop. I want you to invest in my shop. So your friend has a shop. The shop is going to cost him 100,000. You give your friend 50,000. That means you own 50% of the shares of the equity of that shop. When will your friend pay you dividends? When will your friend give you your interest on it? When do you think?
When he makes money, when he makes profits.
Exactly. So it's the same with stocks, right? So when the company makes profit, they usually have what's called an annual accounting period. So they would say, okay, they can pay you your returns every quarter. They can pay you once a year. It just depends on when they make money. The company can say we're paying a special dividend. They can say they're paying it quarterly, interim, or they can say we're paying a final dividend every year. It's the same principle. You invest in a company makes money, you get a share of dividends. Company makes a loss, you don't get anything, because equities is profit and loss. No, nothing complicated there. Does that make sense?
Okay, yeah, it makes sense.
Okay, let's talk about the apps one. When you want to buy, let's say you want to fly on an aeroplane, or you want to go on a bus trip, you can go to the airport, right, and buy a ticket to fly the plane, correct?
Yeah, true.
That's like going to the stockbroker. You go to the stockbroker to buy stocks in the office of the stockbroker. Or you can just go online to Peace Airline and buy a ticket, right? So you can go to the Peace office and buy a ticket. You can go to the Peace online app and buy a ticket. The same with the stockbroker. You can go to their office, or you can go online and buy a ticket. But what if you don't want to go through Peace? You can actually go to an app. Maybe your friend has an app, like, that does buying and selling of tickets. You can go to that app and buy a ticket to fly on Peace Airline. Remember, the stockbroker is just a broker. That's a physical broker. The online app is also using a broker. They're not the brokers. They're using a broker to allow you to buy and sell shares. So behind that app is an actual stockbroker. So when you go on Bamboo and you say, buy me 100 shares of UBA, they are giving your orders to a stockbroker to execute. But they're making it easy for you, because you don't want to go to UBA's corporate office or the stockbroking office. You want to just go on your phone. So it's a way for you to trade easier. It's higher productivity. You can use your phone your laptop, you can buy, you can trade. So these are all options for you. It's the same broker you're going to go through in the end. If you go to the stockbroking office, same broker. You go online to the stockbroking's online app, same broker. You use the app from Bamboo, from Chaka, from what's the last one, Cowrywise, same broker, right? Because you are still going to go to a broker. It's just the convenience of going to the airport or using your phone to buy the ticket. Nothing complicated, right? Nothing complicated. So keep it very, very simple. Again, because your second question, you want to research and learn about this thing before you invest in it. There is nothing new in nothing new in stockbroking, but you have to understand the terms and understand how things happen so you don't lose your money, right? You want to understand when to buy, how to buy, what a bull market means, what going long means, all these terms. Just like when you buy a car. When you have a car, you don't have to be a mechanic. But when you see red light, you want to know what that red light on your dashboard means. You want to know how to put trafficator left or right. Because if you can't do that, you can't drive the car. You don't have to be a mechanic to drop the engine and change the panel beater and all that kind of stuff. But you have to know how the car's dashboard, what the dashboard is telling you, tells you should you speed up, should you reduce your speed, and all that kind of stuff. Makes sense, yeah?
Okay. Okay, sir. Please, on that note, sir, I would like to ask something, sir. Is there any page or any website one can go to make his research, to read about it? Or is there any course I can take to read more about this and understand?
Yeah.
Because, going to Google, trying to survey information yourself, you might just come across different random information.
That's the
just
best.
To know the right one to...
That's the best way. That's the best way to read. Just go to Google and say, how can I invest? It will give you lots of apps you go through, but I'll give you a few. Motley Fool, Motleyfool. Motley Fool is very, very good.
Motley Fool.
Motley, Motley Fool, very, very good. Investopedia, very, very good. You can ask questions, it will give you answers. Again, remember, when you just go online and put, I want to learn how to buy stocks, or go to YouTube and say, teach me how to buy about stocks. You see lots of content. And it's from going through the rabbit hole, you learn a lot. Watch Bloomberg, read the papers. It's the same way you play football, Abi?
Yeah, I do.
Yeah, but when you started playing football, did you know what offside was?
No, sir.
Yeah, but you had to learn offside. People said offside, and you said, what is offside? Then they didn't really explain to you. But the more you watch, the more you understood what offside rule meant. It's the same with investing. You hear something, you don't know what it means, write it down, Google it, you will learn. It will take you time, but after like 6 months, you get to understand what they are saying and all that kind of stuff. But you're not going to learn it in one day, and all. Yeah, so just try to read. Online is free. If it's books, there are lots of books you can read. If you go to my site, do #FinPlanBooks. FinPlan Books. They'll give you lots of books, but online is free. So just take advantage of the internet and learn for free, yeah? Good job, man.
Okay.
Julian,
Thank
close
you,
us.
sir.
Yeah, you're welcome. Julian, take us home a bit. Julian, after you were closing down, thanks so much for waiting. Hey, guys. Yeah, Julian, what's on your mind?
Hi, good evening or good morning, wherever we are. I've been online. I've been trying to get your attention for about 30 minutes now. I guess I had to raise my hand for you to see me. Hello. This is my first space of the year. Lovely year. I just have 3 questions, as I always do. First of all, I'm looking at this year. I came in a bit late, so I didn't catch Mr. Tunde's beginning part. So I hope he hasn't answered what I'm about to ask for. But I want to ask, looking at the liquidity issues in the FX market, I've heard from 1 or 2 people that the banks, of course, are the most liquid stocks available, and the energy guys, the Oando and the Co are not as liquid. So,
and this is
hello. Oh, okay. I thought I was. Am I being heard, please?
Yes. I can hear you. Go
Hello?
ahead. I can hear you. Yeah, go
all
for
right.
it.
All right, cool. So I heard that of course, the energy guys are not as liquid. So, of course, if you're trying to sell the stock, fine, you made maybe set 70x, 100x, 200x on a stock, but trying to get it off your hand to get profit, if that is what your goal is, might be a bit challenging for the energy stock. So I would like to ask how true that is. And my second question is kind of linked to that. Okay, in that scenario, would it be if you're going to have some banking stocks and maybe energy stocks, would give maybe an idea of a good percentage one could maybe spread his investments on both apps, on both sectors. Just maybe like, do you think it's better to be like 70 or 50-50? Just an idea. And of course, the last one is, I wish Mr. Tony was still here. I wanted to find out this, and from your experience, is it better? Let me not say is it better. I think it's better to have maybe a stockbroker you could also reach out to and discuss with one-on-one, apart from just using the apps. So does Arthur Stevens give that kind of response, personalized response if you require, or would you recommend any other stockbrokers in Nigeria that could be more personal, give you more personal charge if you want to call and ask questions and things like that? So I'll leave it at 3. Thank you very much.
So just to make sure I got all 3. So we're talking. First one was liquidity in the FX market. Yeah.
No, liquidity in these two sectors, in the banking sector and oil and gas sector. I heard that getting stocks, the banking stocks are a lot more liquid, so you could get them off your hand as quickly as possible. There's an issue, and the bank and the energy guys were not as liquid. So I'm just asking, what's your take on that? And if someone was to have maybe a spread in both kind of sectors in your stock portfolio,